Good morning, students. Welcome you all once again in the live virtual classes organized by Board of Studies of ICAI. Students, today we are going to discuss about a different topic which is resulting in declining in the value of the asset, right? So as of now, we have covered so many asset-based standards like, for example, property, plant and equipment, intangible asset, right? And in the last class, Shilpa ji has taken a class on Index 23, borrowing cost, right? And borrowing cost is again something which add value to the asset, right? Which increases the value to the asset, correct? So till now, we were talking about PP, intangible asset, borrowing cost standard, and we were talking about the carrying value also, right? And in PP uh, and intangible asset, we discussed that the carrying amount definition is cost minus accumulated depreciation minus accumulated impairment losses. This is what we discussed about. Correct. Friends, so depreciation we discussed cost minus accumulated depreciation, right? How depreciation is computed, what is depreciation? But what is impairment loss? What is impairment loss? Can anyone tell me what is impairment loss? And how it is different from depreciation?
So if carrying amount is greater than recoverable amount, then there will be impairment loss.
So you are saying that after depreciation, if my carrying value is greater than recoverable value, then we can say that there is an impairment. Okay.
Yes.
Good. So friends, have we read this standard in accounting standard? Have we read impairment of asset concept in accounting standard or no?
Yes, sir.
Which standard? Which standard? AS 28. You are absolutely right. We have already covered this standard AS 28 in CA Inter. Okay. So it was part of accounting standard impairment of asset. Impairment of assets. Okay. Friends, in IFRS, which standard is there in IFRS? IAS 36, International Accounting Standard 36. The title is same, impairment of assets. In Ind AS, which standard in Ind AS? Which standard in Ind AS?
Impairment of assets.
Ind AS 36, impairment of asset. So these are the three global standards. These are the three standards. In India, we already had IGAP. In IGAP, we already had AS 28, which talks about impairment of assets. In IFRS, it is IAS 36, impairment of assets. And Ind AS 36 is the converged version of IFRS, converged version of IAS 36, right? Now my question to all of you, that how impairment is different from depreciation? This is my question. Can anyone help me? How impairment is different from depreciation? Naman, Hemant, Leela, Megha, Narsimha, Ankit, Bibhu, or Sanjay, Akshay, anyone who can help me out, that how depreciation is different from impairment or how impairment is different from depreciation. Okay, let me give you an example and then you need to come back with the difference. Okay. Let's say Sanjay has purchased a car. Okay. Sanjay has purchased a diesel Hyundai Verna car. Okay. And he purchased the car at a cost of rupees 10 lakh. Okay. The life of the car is 10 years because then for diesel car, the life is 10 years. For petrol car, the life is 15 years. It is printed on the registration certificate on RC. Correct? After 1 year, so he purchased the car at 10 lakh rupees. He know that the life of the car is 10 years and my car will run in the roads of Delhi for 10 years. Okay. So every year he is charging the depreciation for 1 lakh rupees. Correct? 10 lakh divided by useful life. 10 lakh divided by useful life. Okay.
Yes.
So what will be the value after the end of the first year?
9 lakhs.
9 lakh. Very good. So WDV of the car carrying value is 9 lakh. Cost minus accumulated depreciation. Now, what happened? After 1 year, when the car has completed 1 year, the Delhi government has announced that the diesel cars will ban on the roads of Delhi in the next 6 months due to the heavy pollution, due to the worst AQI. The diesel car will be banned. So what he was doing, 10 year was the useful life, 10 lakh he has spent. So he was doing a systematic allocation, regular allocation, recurring allocation of 1 lakh rupee. And his expectation was every year, if I'll reduce 1 lakh rupee, my carrying value is largely in line with the market value. That is his expectation, right? So after 1 year, he estimated that my car value is almost 9 lakh rupee. Friends, tell me, with this government announcement, the market value of the car will go down significantly or not? Prior to announcement versus post announcement, do you think that the value of the car will go down?
Yes, sir.
Yes.
Surely will
Of
get
course,
down.
yes. Very much obvious. Very much obvious. Of course, yes. Of course, yes. But tell me one thing. Just due to this announcement, Sanjay, the car which you have parked in your parking yesterday night and yesterday evening, the announcement came. It was printed. It was published in the today's newspaper. So whether your car will behave differently from yesterday night to today morning?
No.
Of course, no. Whether your car will give less productivity or efficiency just due to this announcement? No. Answer is no. So your car will behave in the same manner in which it was expected to behave, in which it was expected to run. The productivity, efficiency, everything is absolutely same, right? And other than Delhi, if you take this car to other state, this car is absolutely roadworthy, absolutely fit for running in the roads for next 9 years. Correct. But due to this announcement, the market value has significantly gone down. And Sanjay went to Kirti Nagar market to check the market value of the car. And the valuer told that the value of the car is 6 lakh rupees. The value of the car is 6 lakh rupee. And his WDV, his carrying value is cost minus depreciation 9 lakh rupee. But the valuer is saying that the value is 6 lakh rupee only because, sir, the negative announcement has come and there were a lot of supply. There were a lot of supply of cars because of the negative announcement. Everybody wants to sell the car and we need to take this car to the other state, which will take transportation cost and other cost as well. So that is why the value has gone significantly down. So friends, while we understand this depreciation is a kind of a systematic allocation. When Sanjay purchased the car, Sanjay was aware that yes, I am going to charge depreciation for the next 10 years. Correct, Sanjay?
Yes.
He was aware.
Yes.
Even before purchasing the car, he was aware. He has already projected his P&L account that every year I will have a depreciation of 1 lakh rupees. But Sanjay, have you predicted this impairment? That after 1 year announcement will come and then my market value will go down? Yes?
No, it could not have been predicted. Yes.
It could not have been predicted. Had it been the case, probably Sanjay would not have purchased the diesel car. Right?
Right.
So the point is, it means depreciation is kind of a planned, systematic allocation, but impairment is kind of a unplanned, not systematic allocation. Depreciation is kind of a recurring expense. Impairment is kind of a one-time expense, ad hoc expense. Depreciation comes due to the efflux of time or due to the usage of the asset, right? Because you're using the asset, the economic value of the asset is getting down, or due to the passage of time, the economic value of the asset is getting down. But impairment is not only due to the usage or due to the passage of time. Impairment arises due to the other internal and external factors as well. Due to the other internal and external factors as well, right? For example, so in Buradi, so Buradi is an area in Delhi, right? So the property prices was, the property prices was increasing everywhere, even in Buradi also. Right? So 5-6 years back, the 100 square yard, so 100 gaj, 100 square yard plot on which the building is constructed. So 100 square yard, one floor is costing, let's say, 30 lakh rupee in Buradi. But now the price is suited up, and now that it is costing around 80 lakh, 90 lakh. So there was a murder in a house, right? Some robbers or some kind of, the different element has entered into the house, and they have murdered around 2 of the family members. Due to this murder, and there was only a senior citizen which was there in the family, and now this senior citizen wanted to sell this house. Okay. So tell me, after this event, the value of the house was same like the other house in that area, or the value of that house has gone down? Tell me.
Value of house will gone down.
The value of the house has gone down due to this negative event, right? Due to this negative event. And people with a very soft heart and people with a very loose heart, and even they will not be able to purchase that house. Correct? Who will purchase the house? Who will purchase the house? The investor, the financier. They will purchase the house, that will purchase the house at a throwaway prices. And after holding that house for 3-4 years, then we will sell that house. Once this event, once the kind of a news, this news has been mellowed down, then we will sell this house. So the point is, had it been a depreciation, it was a systematic allocation, but due to this event, the value has significantly gone down, right? So it means impairment is kind of a one-off activity. Impairment is kind of an unplanned activity. Impairment is due to some different circumstantial situations, right? So impairment is due to external factors, which depreciation is not. And impairment is over and above then to the P&L. Impairment is over and above depreciation, right? So impairment is over and above depreciation. So this is the technical difference between the depreciation and impairment. Have you been able to understand after these 2 examples? Have you been able to understand this?
Yes,
Or
sir.
not? Yes. So friends, depreciation is a systematic charge. Impairment is a one-off thing. Depreciation is a consumption based or due to the passage of time, but impairment is event based. Depreciation is a regular expense. Impairment is one-time hit. Yes or no?
Yes, sir.
Yes, sir.
So Megha has written a detailed answer. Megha is saying that depreciation is due to wear and tear of the asset, whereas impairment is due to reduction in recoverable amount for reasons not related to wear and tear or for reasons not controllable by the entity. Very good, Megha. She is also saying depreciation is meant to take place for every year, whereas impairment happens only when there is a reduction in recoverability of the asset. Absolutely great, Megha. And let me tell you, Megha has written this answer before my explanation. Right? Great, Megha. Thank you. Yes. So, friends, this is the technical difference between depreciation and impairment. I hope you guys have been able to understand with the example of car and with the example of that house. Have you been able to
Yes.
understand or not?
Yes, sir.
Yes? Will you
Yes,
be
sir.
able to remember this diesel car example of Sanjay?
Yes,
Yes,
definitely.
definitely. Okay, very good.
Yes.
Yes. So, friends, one thing I would like to share with all of you, and I would like to give as a input, guidance, feedback to all of you. Few of you who are currently listening this session, and few who will watch this session later on. So, my request to all of you then, whenever you read any concept, whenever you discuss any concept, try to relate this concept with a real life. This is how you will be able to understand the concept by heart, and you will retain the concept for a longer period of time. That is one. Number two, after becoming a chartered accountant, few of you must have an aspiration of teaching as well, right? So either as a part of a passion or as a part of a career and profession. Few of you wanted to teach CA inter or CA final students as well after becoming a chartered accountant. So when you will become a teacher, try to take the examples from real life. Try to take the layman language examples to understand the concept, right? So this is my input, my guidance, my feedback, my this input to all of you. Okay, very good. Yes. So friends, talking about the agenda, and I'm glad that you guys are aware about the word impairment. And you guys know the meaning of impairment loss, the recoverable value, right? So it means you are not a infant to this standard. You understand this standard at least fundamentally, correct? So now I will take you more deeper into this standard. I will take you more deeper into the standard, and then we will discuss the concept one by one. And friends, good part, this is a very technical kind of a standard, but not to worry. Believe me, you will enjoy this standard, right? We will cover this standard into 3 classes, okay? Means 9 hours. And I will do a lot of revision. I will solve a lot of question, and believe me, I will take a lot of real life examples. So this standard will become a cakewalk for all of you, right? So friends, we'll discuss the objective scope and meaning of impairment loss. We'll discuss the concept of identification of an asset that may be impaired. Then we will discuss how to measure the recoverable value. We'll discuss how to recognize and measure impairment loss. We'll discuss the concept of cash generating unit. Have you heard about the concept of cash generating unit? My question is, have you heard?
Yes, sir.
Neha, have you heard the concept of cash generating unit? Ankit?
Yes, sir.
Very good. Saminathan? Have you
Yes, sir.
heard?
Yes, sir.
Okay, very good. So it means you guys have heard the concept of cash generating unit. Goodwill. We'll also cover the concept of goodwill here, and that how the goodwill is going to be impaired. And we'll also understand the concept of corporate asset. Okay. So friends, when the complex question will come, believe me, the complex question will come from this part, CGU, goodwill and corporate asset, right? So whenever the complexity will be there, the complexity is sitting in this point. And then how to allocate the impairment loss in a cash generating unit and how to reverse the impairment loss. And of course, the last one is disclosure. What are the 4 pillars of accounting standard? What are the 4 pillars of accounting standard?
Recognition,
RMPD.
measurement, presentation, and disclosure.
Very good. Recognition, measurement,
Measurement,
presentation,
presentation, disclosure.
disclosure. Very good. Recognition, measurement, presentation, disclosure. RMPD. RMPD. Recognition, measurement, presentation, disclosure. Always remember these 4 concepts. Always in your life, right? Till your last breath, always remember this concept. Okay. If you are a commerce student, if you are a commerce aspirant, if you are a commerce professional, then for any auditing or accounting, these 4 concepts you need to think about. Okay. Friends, talking about the objective of this standard is to ensure that the assets are carried at no more than their recoverable amount. The assets are carried at no more than their recoverable amount. Means, like we discussed, the cost of the car was 10 lakh rupees. The carrying value of the car, cost minus depreciation, was 9 lakh rupee, but the market value is 6 lakh rupee. It means the objective is recoverable value is 6 lakh, carrying value is 9 lakh. So no asset in the balance sheet has to be carried at more than the recoverable amount. It means we have to decline the carrying value to make it equivalent to the recoverable value. It means we have to recognize the impairment loss. So carrying value minus recoverable value is equal to impairment loss. So friends, impairment is a positive word or impairment is a negative word? Negative word. So we are talking only about the declining in the value of the asset. Impairment is a negative word. Friends, while impairment of asset standard is there any standard which talks about impairment of liability?
We have contingent liability only, no impairment loss.
There is no impairment loss on liability. Liability can't be impaired, right? So impairment of liability is a good thing for the company, right? So there is a write back of liability, reversal of liability, return back of liability. There is no impairment of liability. Okay, there is a concept for impairment of asset, not impairment of liabilities. Okay, so friends, this objective of the standard is to ensure that asset has to be carried at not more than the recoverable value. This standard also gives you the definition, calculation of recoverable amount, that what is the meaning of recoverable amount, how the recoverable amount is going to be measured. Allocation and reversal of impairment loss, this standard talks about, and this standard also gives you the disclosure. This is the objective of the standard. Friends, Ind AS 36 applies to all assets except. See, when there is an asset, there could be a reduction in the value of the asset also. In entire accounting and reporting, in entire Ind AS, the impairment has been divided into three parts. Impairment on financial assets. Impairment on financial asset. So where the impairment of financial assets are covered?
In AS 109,
Ind AS 109, right? So the concept of financial instruments, the concept of financial assets is there in Ind AS 109, and Ind AS 109 covers the concept of impairment of financial assets. So the first one is impairment of financial asset, which is covered under Ind AS 109. Very good. It means on financial asset impairment, Ind AS 36 is not applicable, right? For example, trade receivables. So when you are creating a provision for trade receivable, what is that? That is an impairment of trade receivables. Okay, and it is computed as per expected credit loss model in Ind AS 109. Second, impairment on non-financial asset. So which standard covers the impairment of non-financial asset?
PP, we have PP is there, PP standard.
We have property, plant and equipment. We have a biological asset. We have an intangible asset. We have an investment property, right? So which standard takes care of impairment on the non-financial asset? Ind AS 36. Ind AS 36. Okay. So Ind AS 36 covers the concept of impairment of non-financial asset. So this impairment is coming from Ind AS 36. Ind AS 16 PP is talking about carrying value. वो आपको impairment नहीं बताता, वो कहता है for impairment you need to refer Ind AS 36. Okay. So friends, impairment on financial assets, Ind AS 109. Impairment on non-financial assets, Ind AS 36. Okay. But tell me one thing. Inventory is a financial asset or non-financial asset?
Non-financial asset.
Inventory is a non-financial asset. And inventory is an asset, right? You all agree inventory is an asset?
Yes,
Yes.
sir.
Yes, sir.
So now my question is, which standard takes care of impairment of inventory?
India's
India's
too.
too.
India's too.
Why you are saying Ind AS 2? Why not Ind AS 36?
Because the inventory is valued at the cost or NRV, whichever is lower.
Lower.
Already the impairment is taken care of that particular standard in India's too.
Okay. I think one more student wants to attempt this. Yeah, please. I think somebody else wanted to explain this. Please explain. No one? Okay. Yes. Saminathan has bang on. He has absolutely explained it rightly. So the measurement model, the valuation model of inventory says that inventory has to be measured at cost or NRV, whichever is lower. Means if the net realizable value is lower than the cost, it has to be the value of the inventory, the value of the asset has to be reduced to NRV. Right. So it means while inventory is a non-financial asset, okay. So impairment on inventory, impairment on non-financial asset has to be impairment on non-financial asset. This inventory has to be as per Ind AS 2. Has to be as per Ind AS 2. Okay. So if impairment on inventory is as per Ind AS 2, so whether Ind AS 36 takes care of impairment of inventory? Answer.
No.
Answer is no. So have you understood why this word except is there? This word except is for whom?
Impairment of financial assets.
Impairment of financial asset and
Impairment of inventories.
inventory. Third, deferred tax asset. You understand the meaning of deferred tax asset?
Yes.
So standard says that, which standard? Which standard covers deferred tax asset?
India's 12.
Ind AS 12. Right? So Ind AS 12 says that deferred tax asset needs to be recognized and remeasured. Deferred tax asset needs to be recognized and remeasured. Needs to be remeasured as per the probability of recovery of the DTA. Right? So DTA has to be recognized or DTA has to be remeasured on the every reporting date in line with the probability of recovery of DTA. Right? So if DTA is recoverable, then only it is going to be stay. Otherwise, it will be reversed. Okay. So who is taking care of impairment of DTA?
India's 12.
Ind AS 12. So whether Ind AS 36 takes care of recovery of DTA?
No.
Impairment of DTA? Answer is no. Answer is no. So friends, now you guys have understood, right? This scope part, have you understood? You are not required to remember. Okay. So use your memory for the better task. You are the CA final student and you have lot to learn. So till the time you are a student, you have a lot to learn. And once you become CA, you have lot to earn. और earn कहाँ से आता है? From where the word earn is coming? From where?
From learn and time.
The word earn is coming from
Learning.
Learn.
So till the time you are a student, your focus is to learn. And when you become a chartered accountant, your learning will give you earning.
Learn more, earn more.
Yes.
Yeah.
Very good. Okay. While even after becoming a chartered accountant, learning will continue. Okay. I'm also learning. So yesterday night I was reading this this one of the concept or one of the case study of Ind AS. So before that I was learning some amendment. I was reading some amendment on Ind AS which came recently. Okay. So friends, scope part just you need to understand, but now you guys have understood the scope part, right? Ind AS 36 applies to all assets except inventory, except contract assets, except deferred tax asset, except asset arising from employee benefits, and of course, except financial instrument also, which because it is covered by Ind AS 109. Okay. 41 biological asset, non-current asset held for sale, and financial assets, right? You need to remember this. You need
No.
to remember this? No.
No, sir.
Right?
Just understand.
But by the time you will complete your Ind AS, if your concept is fundamentally strong, you are not required to learn Ind AS. Like how I have learned this part. So I have just mapped my mind that the impairment is dealt in three manner. Impairment on financial assets. Of course, I know expected credit loss model is there. So 109. Impairment on specific asset covered in the specific standard, like deferred tax asset, non-current asset held for sale, biological asset. Why biological asset impairment is, while it is a non-financial asset, but why biological asset impairment is as per Ind AS 41? When you read Ind AS 41, you will found that on every reporting date, biological asset has to be measured at fair value. So impairment is already addressed in fair value. I have a mobile, okay? If I will say that I will remeasure my mobile on every reporting date at fair value, then tell me, this impairment part is already addressed, right? When I'm remeasuring at fair value, yes or no?
Yes,
Yes.
sir.
Yes.
Yes. Okay. So friends, we understood this part, scope part. Now, what is impairment loss? So tell me, in the example of car of Sanjay, the WDV, the carrying value was 9 lakh. The market value, recoverable value was 6 lakh. So tell me, what is the impairment loss?
3 lakh is impairment loss.
3
3
lakhs.
lakh, 3 lakh is the impairment loss. Okay. What is the formula of computing impairment loss?
Carrying amount minus
Yes.
recoverable amount.
Carrying amount minus recoverable amount. Very simple. Carrying amount minus recoverable amount. Yes. Carrying amount minus recoverable amount. Okay, this is the formula of impairment loss. So what is the meaning of carrying amount? So for the purpose of impairment, you have to check the carrying amount as a cost minus accumulated depreciation, correct?
Yes.
Because here you are checking the impairment. Here you are checking the impairment. Okay. So, but for the purpose of Ind AS 38, Ind AS 16, Ind AS 40, what is the formula of the carrying amount?
Cost minus accumulated depreciation
Impairment
minus
loss.
accumulated.
Yes, cost minus accumulated depreciation minus accumulated impairment loss.
impaired
So
loss.
this is the value which is going to stay in the balance sheet, right? Okay. But for an impairment, you are evaluating impairment, you are checking impairment. So you have to do cost minus depreciation. Then you need to compare with the recoverable value. Okay. If recoverable value is lower than the
Carrying amount.
carrying value, then only there is an impairment. What happens if the recoverable value is higher than the carrying value? Then
Nothing to do.
then nothing to do. Very good. Very good. Thank you, Sanjay. Thank you for giving the regular answer and the right answer. Yes.
So if it is a revaluation model, then it will go to the revaluation reserve.
Yes. So by impairment of asset standard, if the recoverable value is higher, you are not going to revalue. Okay. So that revaluation, if you have opted for a revaluation model, then only that revaluation surplus will come into picture. Revaluation surplus will not come into picture due to impairment of asset standard, right? Due to impairment of asset standard. Is that clear? Fundamentally, is that clear? Everyone, please let me know. Everyone, is whether the standard is clear to all of you?
Yes, sir.
Yes.
Yes, sir. Clear.
Yes. Okay. I want you guys to be fundamentally very strong. That is why I spent around 30 minutes in explaining the basic concept. Okay. Yes. Friends, this is the formula of the impairment loss. When carrying value is greater than the recoverable value, then only impairment loss will come into picture. And carrying amount minus recoverable amount is equal to impairment loss. Right? This is what it is. Okay. Now, friends, in impairment of loss standard, impairment loss standard, impairment of asset standard, we will see impairment in two parts. Number one, impairment of a single asset, impairment of an individual asset, and impairment of a group of asset, right? There could be two situations only, na? Either it could be a single asset or it could be a group of asset. So what is the name of group of assets in this standard?
Cash generating unit.
Cash generating unit. Very good. CGU, cash generating unit. And what is the name of the individual asset? Only asset. Asset. Yes. Only asset. आप लोग सोच में पड़ जाते हो, क्वेश्चन पूछा है इसका मतलब कुछ दूसरा ही नाम होगा, right?
Yes, sir.
Whether it be a PPE or investment asset or goodwill, purchased goodwill, whatever the case may be.
Okay, so it's a asset only, right? So either we will see the impairment on a single asset, on an individual asset, which is asset. It could be PPE, it could be intangible asset, it could be investment property, it could be goodwill also, right? Or it could be a group of asset. Cash generating unit means group of asset. Okay, so we'll see the impairment on these two parts, individual asset and group of asset. Group of asset means cash generating unit. Okay, and friends, carrying amount we know. What is the meaning of recoverable amount? What is the meaning of recoverable amount? Anyone?
Sir, it should be a higher of fair value less cost of disposal or value in use, whichever is higher.
Yes. So recoverable value is something, recoverable value is a value which is higher of what? Higher of fair value less cost to sell, fair value less cost to disposal, and value in use. Okay, means for recoverable value, you have to compute two values. Number one, fair value less cost of disposal. Number two, value in use. Okay. So let's understand the meaning of recoverable value. Let's understand. Okay. So friends, what is the meaning of recoverable value? So recoverable value is higher of fair value less cost to sell and value in use. Friends, tell me one thing. How you can enjoy the future economic benefit from an asset? What are the two ways from which you can get the future economic benefit from an asset? You have an asset. You have an asset. So how will you get a future economic benefit from the asset? Please tell me.
There will be some certain cash flows in the future.
There will be some cash flows in the future. Very good. Now,
What value you will be receiving from the asset by using that particular asset?
So now I am changing my question. As you told, by having the cash flows. Now tell me, what are the two ways by which you can get the cash flows from the asset?
From the sale of the products or services given.
Either of selling or leasing.
Or if we sell the product, sell the asset itself.
Okay. So number one is sale of the asset. Number two?
From the sale of the products or services.
Number one is that we can sell that asset now. For that, we will get that fair value from fetch with the asset value. Otherwise, we will continue to use the asset from which we will generate some cash inflows.
Yes. So you can get the future economic benefit from the asset. You can get the cash flow from the asset by two ways. Number one, you go to the market, you can sell the asset and you can get the cash flow. Means by selling the asset. Number two, by using the asset. You can use the asset to the lifetime. You can use the asset to the economic life, useful life of the asset. You can use the asset up to the economic life of the asset. And this is how you will get the cash flows from the asset. This is how you will get the cash flows from the asset. Okay. So this is value in use. So when you are generating the cash flows from selling the asset, means if I go to the market, if your view is an exit view, if I will exit from the asset, then what is the value which I got? That is known as a fair value. That is known as a fair value. What is the fair value? Fair value is a price which you will receive by selling an asset. It's an exit price if you want to exit from the asset, right? But what is value in use? Value in use is an amount, it's a value which you will get from using the asset. Means value in use is equal to present value of future cash flows. If example, today I have an asset, I have a machinery. I will use the machinery for next 10 years and I will generate the cash flows. Friends, will you aggregate the next 10-year cash flow and will you say that this is my value in use? Yeah?
Yes.
Yes, sir. By discount.
By discounting, because in the next 10 years, whatever you will get, because you are computing the value in use, you are computing the recoverable value today. You are computing the recoverable value today, as of today. So you need to discount the future estimated cash flows. So friends, fair value is a value of selling an asset. Value in use is a value of using an asset. Okay. So that is why standard says that when you want to sell the asset, I mean to say, when you want to arrive at a market value, you need to compute it is a fair value less cost to sell, because when you will sell, there is a cost of disposal also. Okay. And when you want to use the asset, whatever is the present value of future cash flows, you need to discount it, and that will be the value in use. Have you understood it little bit or not?
Yes.
Yes. Will you be
Yes.
able to remember in your lifetime that what is the concept of fair value less cost to sell and value in use? Now you have understood. So either you need to compute the value by selling the asset or value by using the asset, as simple as that. Yes?
Yes.
Right? So friends, recoverable amount is higher of fair value less cost to sell or value in use. Recoverable amount is higher of fair value less cost to sell and value in use. Okay? Right? What is my fair value less cost of disposal? It's a market driven value. Fair value less cost of disposal is a market driven value. It's a market value. Value which is derived from the exit point of view, which is selling the asset. Okay. And that is why it is fair value less cost of disposal. Fair value less cost of disposal. What is the value in use? Value in use is an entity specific value. Right? So how the entity is generating the cash flows. So value in use is always the entity specific value. Okay. Value which is derived from the continuous point of view. Continuous point of view means from using the asset. Continuous point of view means from using the asset. Okay. And that is why value in use will be arrived at present value of future cash flows. Present value of future cash flows. Is that clear to everyone? Yes or no?
Yes, sir. Clear.
Yes.
Very
Clear.
much clear?
Very much clear.
Clear in mind or clear from mind?
Clear in mind, sir.
Clear in mind?
Clear in mind.
Okay. Yes. So friends, example. The company is leasing the machinery on a rental basis. The remaining life of the machine is 5 years. The company expects 1 lakh rupees rentals per annum by leasing for the next 5 years. The discount rate is 10%. Compute value in use of the asset. How will we compute the value in use of the asset?
By discounting the cash flows of 1 lakh rentals per annum for 5 years, discounting it
Yes.
10%.
So we need to discount it for the 10%. Okay. Yes. So what is my future cash flows for 5 years? 1 lakh rupee.
1 lakh each year.
1 lakh each year. Total cash flow 5 lakh year. What is my present value factor in the first year, assuming that the cash flows are arising at the end of the year? What is my present value factor? 1 divided by 1.
1 divided by 10. 1.1.5. Yes.
Divide by 1.1. This is the present value factor.
Yes.
When I will multiply this from the present value factor, I will get the present value. And here, this is the value of my value in
Value in use.
value in use. This is the value of value in use. Okay. This is the value of value in use. So we did this calculation multiple times, this discounting calculation, right? Yes?
Yes.
Yes.
Absolutely clear? Value in use, sell the asset, use the asset. दो ही तो काम कर सकते हो ना, क्या कर सकते हो? या तो एसेट को रखोगे या एसेट को बेचोगे. वैल्यू तो दो तरीके से निकल सकती है ना.
Yes, sir.
By selling the asset or by using the asset, that is how the value can be arrived at. Right? If I need to compute the value of this mobile phone, I have to go to the market and ask what is the value of the mobile phone if I want to sell it out. Or I will see that the remaining life of the mobile phone is 5 years, let's say, and what is the value which I'll generate from having this mobile phone. Okay, right? Yes. Second example. The fair value of the machine is 4 lakh and the selling cost will be 50,000 if the company wants to sell the machine. The carrying value of the machine is 4.25 lakhs. Calculate the recoverable amount and impairment loss. बताओ दोस्तों फटाफट. First of all, what is the fair value? So Neha, I want you to answer. Not Sanjay, not Saminathan, Neha. Neha, can you please unmute yourself?
Yes, sir.
Yeah, what is the fair value of the machine?
Sir, 4 lakh.
What is the cost of disposal? Selling cost?
Selling cost will be 50K.
50,000. Yes, 50,000. Okay. So 50,000 is the, what is my fair value less cost of disposal?
Sir, it will be 3.5 lakh.
3.5 lakh. Okay. What is my carrying value?
Sir, 4.25 lakh.
4.25 lakh is the carrying value. 3.5 lakh is fair value less cost to sell. In this question, whether value in use is given? Not given?
No, sir.
Right? So I will compare my carrying value with fair value less cost to sell. So what is my recoverable value in this question?
Sir, 3.5 lakh.
3.5 lakh, na?
Yes,
Right?
sir.
So you are giving right answer. Just have a full confidence. You are giving right answer. Okay. So 3.5 lakh is the recoverable value. What is the carrying value? 4.25 lakh. What is the, so whether we need to impair?
Yes, sir.
Yes. Why? Because my carrying value is higher. Recoverable value is lower. So what is my impairment loss? My impairment loss is how much? 75,000. Correct?
75,000.
Correct? Yes. So value in use is not given in the question. Fair value is 4 lakh. Cost of disposal is 50,000. Right? So what is my fair value less cost of disposal? It is 3.5 lakh. Right, Neha?
Yes, sir.
Recoverable value is what? Higher of fair value less cost to sell and value in use. Higher of fair value less cost to sell and value in use. So my value in use is not given. Okay. So just a minute. It is higher of what? It is higher of what? Higher
Fair
value
value
of
less.
this and this, right? Just a minute. I think चलो इसको ऐसे कर लेते हैं. ठीक है. 3.5 lakh. What is my carrying value? 4.25. My impairment loss is carrying value minus recoverable value. 75,000. Okay.
Yes, sir.
Any doubt, any problem, any question, any clarification, any gila shikwa?
Nice, sir.
No? Okay.
No.
Very good. Clear in mind? Very good. Everybody is saying clear in mind. Yes. Friends, example number 2. Now, who will give this answer? So, tell me who will give the answer. Chitra, will you give the answer? Whether your mic is working? Chitra?
Yes, sir.
Okay. Yes. So, Chitra, now in this example, tell me what will be the impairment loss if the carrying value of the machine is 3.75 lakh instead of 4.25 lakh. What I have done, so Chitra, in the first example, the carrying value of the machine was 4.25 lakh, right? But now I have reduced the carrying value by 3.75 lakh.
Okay.
So, Chitra, what is my fair value less cost to sell? 3.5 lakh.
3.5 lakhs.
What is my carrying value?
3.75 lakhs.
3.75 lakhs. So, what is the impairment loss?
25,000.
25,000. So, my impairment loss is 25,000. So, in this question, so recoverable value is higher of fair value less cost to sell in value in use 3.5 lakh. Carrying value is 3.75 lakh. So, carrying a value is what I'm saying. Just a minute. Yes. So, in this case, my carrying value is 3.75, recoverable value is 3.5. So in this case, what is your impairment loss? Your impairment loss will be
25.
is equal to how much? Your impairment
25,000.
loss is equal to carrying value minus recoverable value. Okay, recoverable value. So what is my impairment loss? This minus this, carrying amount minus recoverable value. Now, another example. Example number 3. Example number 3. So let me take this example only. Sorry. Are you saying something?
No, sir.
So the carrying value of the machine, the fair value of the machine is 4 lakh. Selling cost will be 50,000. If the company wants to sell the machine, the value in use is rupees 4.50 lakhs. Compute the recoverable amount and impairment loss. So Akshay, you need to answer now. Akshay, are you there?
Yes, sir.
Yeah. So what is my fair value less cost to sell, Akshay? In this case, fair value less cost to sell. Sorry?
3.5.
3.5 lakhs, right? So 4 lakh minus 50,000. 4 lakh minus 50,000. Very good. Akshay, what is my value in use given in the question?
4.5 lakhs.
4.5 lakhs. 4 lakh 50,000. What is my recoverable value, Akshay?
4.5 lakhs.
Recoverable
Higher
value
of
is
higher
higher
of minus
higher of A and B. Higher of A and B. What is my A and B? Fair value less cost to sell is A. Value in use is B. Yes. So what is the value? Value is 4.5, right? Higher. So tell me, what will be the impairment loss? What will be the impairment loss?
nothing, sir. 0.
0. Yes. So the carrying value is lower than the fair recoverable value, and then there is no impairment. My carrying value is equal to 4.25 lakh, 4 lakh 25,000. So in this case, there will be no impairment. Why? Because my carrying value is already lower than the recoverable value, right? So there is no impairment. But if the company has opted for revaluation model in case of PP&E and intangible asset, then you need to check for revaluation surplus. Is that clear? Is that clear to everyone?
Yes, sir.
Very much clear? With these 3 examples, very much clear?
Very much clear.
Okay, right? So now, have we become master of recoverable value, carrying value, impairment loss, right? What happens when the value is higher than the carrying value? In that case, no impairment. Only increase has to be taken as per the respective standard. Means if you have opted for revaluation model in PP or intangible asset, then only you need to revalue, otherwise not. Correct?
Right.
Absolutely right.
Right, sir.
Okay, great. So friends, this is what we have covered. This is the quick question. The carrying value of building in the books of ABC as on 31st March is 250 lakhs. As on that date, the value in use is 200 lakhs. And fair value less cost to disposal is 188 lakhs. So what is my recoverable value? Value in use is 200. Fair value less cost to sell is 188. What is my recoverable value?
200.
200.
Higher
200
sir.
lakhs is my
50.
recoverable value. Okay.
50 lakhs
Why?
will be impairment.
Yes, and carrying value is 250 lakhs. So my recoverable value is 200 lakhs. My impairment loss is 50 lakhs.
50 lakhs.
Yes. This is the answer. Now, friends, let's reach to important part. We understood this impairment loss. Tell me, this impairment valuation is a very simple exercise.
Yes.
Yes, because it's the
Yes, very
examination
simple.
question, right?
No, sir,
But
it's not a simple, sir. It's not simple. It involves a lot of valuation technique. Value, we need to spend a lot of money on it to revalue each and every asset.
so, friends, let's see from the real life perspective. Tell me whether these Indian accounting standards, all these accounting standards, are drafted for CA students or drafted for industries, auditors, real life. These are drafted for real life. Okay. So if you have to perform in real life, you have to read, you have to learn, you have to practice. Okay. So standards are drafted from real life perspective. It is not from the student perspective. Means sirf intent and objective is not to teach student. The intent and objective is to make professional who can understand the implication of these standard. And for becoming a professional, you have to start your journey from a student. Right? So tell me one thing. For ensuring that your carrying amount in the balance sheet of an asset should not be exceeding recoverable value. How will you ensure that? Until and unless you will not compute recoverable value. Correct? For computing recoverable value, what you require? For computing recoverable value, what you require? You require fair value.
Value
Fair
in
value चाहिए
use.
ना?
Fair value.
How will you arrive at fair value? By appointing a valuer. For example, if Reliance has a plant and machinery of, let's say, 10,000 crores. So whether let's say Sanjay become a chartered accountant and Sanjay has joined Reliance Industries in Mumbai. Okay. So whether Sanjay will compute the fair valuation? Sanjay, will you able to find out the fair value? No. So Sanjay will appoint a valuer. Okay. For valuing a 10,000 crore rupees of a plant and machinery, don't you think valuer will take a hefty amount of a fees? Yes?
Yes.
So it means this fair valuation is a cost compulsive exercise. This fair valuation is a cost consuming exercise, cost incurring exercise, cost compulsive exercise. This fair valuations. Okay. It's a cost compulsive exercise. Okay. Second, don't you think if you have to arrive at value in use, you have to do the projections. You have to do the projections. For example, solar power plant. So when you do the impairment testing, when you compute the recoverable value in use of the solar power plant, you have to do the projection for the next 25-30 years. You have to do the projections of next 25 to 30 years. So is it an easy task? From the examination question, it is very easy because the question will give you the projection. The question will give you the fair value. The only thing is the question will give you the fair value separately and the cost to sell separately. You need to deduct that. Okay. But in the real world, estimating value in use means estimating discount rate, and estimating future cash flow means making a future projections and then estimating discount rate. Is it an easy task?
No.
Not
No,
an easy task. Not an easy task. So neither fair value less cost to sell is an easy task. It is a cost compulsive exercise, and this value in use computation is also a lot of efforts will be required in this value in use. And then you will reach at recoverable value, and then you will be able to assess whether there is an impairment or not an impairment. Correct? If your recoverable value is higher than the carrying value, then there is no impairment. If it is lower than the carrying value, then of course there is an impairment and you need to record the impairment. So friends, tell me one thing. You are now able to appreciate and understand the real life jugglery, the real life problem. And don't think about the examination question, think about the real life problem, and just download any big company annual report, any company, right? For example, you are eating Ashirwad Atta. Have you heard about Ashirwad Atta?
Yes,
Ashirwad
sir.
flour? Which company? Which company's flour is this? Which company's atta is this?
ITC. ITC.
ITC. Download the balance sheet of ITC. Very simple. Okay. Yes. Are you using car? Which car? Maruti, Swift, or Tata Nexon? Please download the annual report of Tata Steel Limited, Tata Motors Limited, or Maruti Suzuki India Limited. Just look at those balance sheet only. You will find lakhs and crores of assets on the balance sheet. So friends, the basic objective of Ind AS 36 is to ensure that all those carrying value in the balance sheet should not be exceeding the recoverable value of those assets. So friends, what do you think? All these big companies, every year they are doing the impairment testing. Every year they are computing the recoverable value.
No,
What do you
sir.
think? The answer is no, and the answer is right. But how come it is possible?
Sir, cash.
You can speak in Hindi. You can speak in Hindi also. If you want to speak in Hindi, you can speak in Hindi. Yes, please.
Sir, we need to do the impairment testing as we studied in intangible asset as well. There are 3 items we need to revalue. We need to impairment testing on every year.
Okay. So you are going one step beyond, right? So my general question, I'm not going specific, right? So my general question, all these big companies which have a big, so forget about intangible asset, they have a lot of plant and machinery, tangible asset, PPE. So my question is, their plant and machinery is located across various geography in India and outside India. Number one. Number two, they have a huge amount of plant and machinery. They have a lot of items in the plant and machinery. So my question is whether every year they are doing this recoverable amount calculation. They are getting the fair valuation done every year, whether they are computing the value in use. This is my question. And if not, how they are complying with the standard.
Sir, they have to incur cost to get a fair value. Also, they have a very diversifying asset at different their units.
Okay. So let me give you the answer. And standard has given the answer. Standard has told that before computing the recoverable value, you need to do the impairment testing exercise. Right? क्रिकेट में क्या होता है? क्रिकेट में जब कोई प्लेयर खेलता है, right, the player is getting selected in cricket, whether IPL or let's say in the state tournament or in the national tournament. Okay. So whether he is directly selected in the team, or before that some testing has been done on that player, some rehearsal, practice, testing, right? Evaluation.
Yes, they have taken.
Yeah. Likewise, before computing recoverable value, standard says that an entity shall assess at the end of each reporting period on every 31st March, an entity shall assess whether there is any indication, any indication that an asset may be impaired. Means, is there any indication that the asset may be impaired? Is somebody telling you that yes, your asset has decreased the value? Is there any indication whether your asset has damaged, whether your asset has met with accident, whether your asset is not giving enough productivity, whether government has come up with a negative announcement, whether the technology has been outdated, right? So if the indication exists, then only you need to estimate recoverable amount. Friends, for example, Reliance has a 1 lakh crore of property, plant and equipment, and they are depreciating the PP as per the useful life. Every year they are generating huge profits. Every year they are paying a lot of taxes. Their market value is increasing. They are doing pretty well. Their assets are productive. Their assets are giving a lot of productivity. So have you found any indication that the asset will be impaired?
No.
No. There is no negative vibes. There is no negative news. एक स्टूडेंट जो attentive है क्लास में, there is a student who is very punctual in class, come at time and go after class, who is giving all the answers, right? Who is completing his homework. Is there any indication that that student will fail? है कोई indication?
No, sir.
If the indication is not there, will you estimate the recoverable amount?
No.
Right? No. Answer is no. You will not estimate the recoverable amount. Means you are not going to engage the fair value valuer. You are not going to compute the fair value. You are not going to prepare the projections. You are not going to compute the value in use. Right? But there is a student who casually came in the class. Means who is not regular, who is not punctual, who never come on time, who is not able to answer also, right? In that case, whether the teacher will assess or not, whether the teacher will spend more time on that student or not, to ensure that that student will also pass in the exam.
Yes, sir.
ये तो बड़ा सिंपल एग्जाम्पल है ना, ऐसे ही होता है ना?
हाँ सर, ऐसा ही होता है.
ऐसा ही होता है ना. बचपन में मैं पढ़ाई नहीं करता था तो टीचर मेरे पे ज्यादा ध्यान देते थे,
मारते भी थे सर.
So the point is, and why I'm telling this story, it means if the indication exists, then only you need to estimate recoverable amount. Otherwise, every year you are not going to estimate the recoverable amount, right? So it is not mandatory. Your estimation of recoverable amount will come into picture only when the indication exists. Only when the indication exists. Okay. So my dear friends, let's come on the Excel file. Identification of an asset that may be impaired. At the end of each reporting period, management should check if there is any indicators of impairment. If indicator exists, then do the impairment testing and estimate the recoverable amount. What is impairment testing? Impairment testing is estimation of recoverable amount. Estimation of recoverable amount. This is known as the impairment testing. Sir, what is the indicator? Sir, what is the indicator? Okay. What is the indicator? There are two indicators, left indicator and right indicator. Like car. कार में कितने इंडिकेटर होते हैं?
Yes,
कार
sir.
में दो इंडिकेटर होते हैं ना, लेफ्ट और राइट.
Left and right.
Yes.
यहाँ पर भी दो इंडिकेटर है. Here also there are two indicators. internal indicator, external indicator. What is internal indicator? Right? Internal indicator means which is arising, the indicator which is giving you the indication within the company. Right? For example, there is a evidence of obsolescence or physical damage. You have thought of that your asset will live for 5 years. After 2 years, you found that your asset got physically damaged. So tell me, in that case, you will estimate the recoverable amount or not?
Yes, sir. Bill.
Yes, because it is physically damaged. There is a obsolescence. It is physically damaged, right? So you will compute the recoverable amount. Your asset is remaining idle. Your asset is not giving you any. Your asset is not giving you any future economic benefit. In that case, tell me. In that case, will you estimate the recoverable value or not?
Yes, sir.
Simple
Yes.
thing. It means you are not able to arrive the future economic benefit for which you have purchased the asset. It is important to estimate the recoverable amount. There is a discontinuance, disposal, or restructuring plans. The company wants to relocate the asset from the factory, or the company wants to shut down the operation. आपने सुना है कभी कि वो अपना घर खाली कर रहा है, so the person is vacating his premises and he is selling goods at throwaway prices. I am teaching on a table. It is a branded table, right? So my laptop is there on a table, and the cost of the table was 20,000 rupees. Okay? New table. So this table is from Paperfry. Paperfry is a company which used to sell the furniture, and very good table, 20,000 rupees price. So one of my neighbor who was vacating the house and who was shifting from Delhi to America. So he is in hurry to sell the furniture, and he sold that table to me, which is only 1 year old table, which was 1 year old table. He purchased at 20,000 rupees. He sold it to me at 6,000 rupees. 6,000 rupees. So friends, why? Because of the restructuring plan, I know that he has to vacate the house. He has to dispose of all the furniture. He does not have a time. So I know that the value of his furniture has gone down, right? So this is an indicator. So he has to impair because he has a restructuring plan in the mind. Declining asset performance. Your asset performance is not proper, right? Your asset has a declining performance. So your asset performance is getting declined. In that case, it is an internal indicator of impairment. See, these are indicator. I'm not saying that if this indicator exists, the impairment loss will be there. I'm not saying. If this indicator exists, then you need to estimate the recoverable value. You need to compute fair value less cost to sell. You need to compute value in use. Okay. Then there are external indicator. What is external indicator? Significant decline in the market value. The market price has significantly declined. Market price has significantly declined. That asset, right? Changes in technological, market, economic, or legal environment. There is a changes in technological environment, market, economic, or legal environment. Have you heard about Nokia?
Yes, sir.
Nokia was the market leader, and listen my word, I have used the word was, not is. Nokia was the market leader in handsets, right? In the phones, Nokia was the market leader. So Nokia was the market leader, and Nokia is no more. No more means Nokia has nothing called as a Nokia does not have any good amount of market share even. So why Nokia failed? Because Nokia, like you guys, if you guys will not be updated, you guys will be outdated, right? So if you will not be updated, you will be outdated. So Nokia has not lived with the technology. Nokia was master in keypad phones. When keypad converted to QWERTY and QWERTY convert to Android touch phones. So Nokia has not come up with the market. Nokia has not upgraded technology, and due to that, Nokia has impaired. Nokia's plant and machinery. So Nokia's market value gone down. So Nokia has got impaired. So friends, if there is a change in technology, there is a change in market or legal environment, it is again an indicator of external indicator of impairment, like negative government announcement, change in political factors. So these are the external indicator of impairment, right? Changes in interest rate. If interest rate have increased, why increase in interest rate is a external indicator of impairment? Can anyone help me understand here?
Sir, while we are computing the value in use, if the rate of interest is increased, then definitely the value in use will be automatically decreased, sir. So that the impairment loss, we have to test it. It's one of the indicator.
Absolutely fine. Great. Thank you, Saminathan. Thank you. So, I love to hear these kind of answers from the students. I love to hear. Yes. You're absolutely right. For example, and let me give you an example and let me show you so that everybody will be able to appreciate. So friends, let's say indicators, okay? Indicators. How many indicators? Internal indicators, and external indicators. External indicators, right? Internal indicators and external indicators, okay? Increase in interest rate. So, assuming the next year cash flow is 1 lakh and discount rate is 10%. What is value in use? What is value in use? क्या होगा value in use? What is value in use? Value in use is equal to present value of future cash flows 1 lakh divided by
90,909.
1.19.
90,909. Okay, this is my value in use. Okay. Assuming the next year cash flow is 1 lakh and the discount rate increased to 15%. What is the value in use? Tell me. 1 divided by 1.1? 5?
Yes, sir.
So this value in use has gone down. 86,957. See the magic? See the magic? So don't you think when there is an increase in interest rate, it is also an external indicator of, what?
Impairment.
Indicator of impairment.
Impairment of loss.
Yes. So low market capitalization. The company's market capitalization is decreasing, means there are negative sentiments in the mind of the shareholders. Okay. There could be some negative news also. So the low market capitalization of a company is also an indicator of impairment. I'm not saying that it will be impaired. What I'm saying, indicator. क्या जो स्टूडेंट कम पढ़ता है क्या वो हमेशा फेल हो जाता है? आंसर इज नो. आंसर इज नो. I did self-study. And in CA intern and CA final, I was behind 5 marks in getting a rank. Of course, last rank, not the first rank, last rank. First rank से 5 number पीछे होता तो second या third rank आ जाती. Okay. So I was behind 5 marks. Okay. And I was an average student. I was not a very kind of intelligent student. I was an average student in my class. Okay. So again, it's an indicator. It's an indicator. So if I was not doing a lot of study during my examination, of course, my parents used to tell me that, beta, please do more and more study, because they are getting an indication that might be he need more practice. Okay. Otherwise, he may fail in the exam. Correct. But not necessarily he will fail in the exam. And I passed the exam in the first attempt with the flying colors. Okay. So have you understood the meaning of these indicators? Right? These are just indicators. Okay. So when indication exists, then only you need to compute the impairment loss. Friends, recently 3-4 years back, many companies have started doing this impairment testing. Tell me why. What was the biggest external indicator?
Corona.
Corona. Yes, COVID time.
Idle.
In the COVID time, this due to this pandemic, there was one of the biggest external indicator where the company started doing the impairment testing. All these tour and travel companies, aviation companies, hotel industries, they have started doing the impairment testing. But what about telecom? What about FMCG?
They are
Not needed.
Not needed for Corona. Let me tell you, while it was not a good thing. So prior to my current organization, I was part of Bharti Group, Bharti Airtel Group. And believe me, I got the best increment due to COVID time. Why? Because of the COVID time, Corona, everybody started working from home. Everybody needs good connection. Everybody needs good connection. And these live virtual classes also, started during the Corona time. Okay. So everybody started working from home, online tuitions, all the kids needs computer, internet bandwidth, right? So in every house there is a broadband, and there is a huge demand of data and mobile phone and the voice call services. So these telecom companies have minted good money in COVID, right? These FMCG companies, hospital industries, right? So few industries have a favorable impact in the COVID, but most of the industries have a negative impact due to the COVID, right? Okay. So friends, we understood that entity shall assess at the end of each reporting period whether indication exists or not exist. If indication exists, then the company has to what? Then the company has to do the impairment testing. Okay, if impairment exists. If impairment not exists, then if indicator not exists, then no need to estimate the recoverable amount. But there are three assets. There is one exception to this rule. What is the exception to this rule?
Sir, we have studied in India, sir.
examination for their set.
In indefinite asset, we need to intimate life. Every year we need to test that impairment, and also that intangible asset not yet available for use, which is in work in progress, and goodwill acquisition. We purchased goodwill based on the business acquisition.
Very good. So the exception is only for three assets. In case of below asset, the impairment testing is required irrespective of the indication of impairment. Means only for three assets. You are not required to see the indicator. Only for three assets. Means mandatory impairment testing. Mandatory impairment testing means mandatory estimate of recoverable value. Mandatory estimate. Okay. And all these three are intangible asset. All three are intangible asset. Number one, intangible asset having indefinite useful life. Have we read this concept in Ind AS 38? There could be a finite life and indefinite life.
Yes, sir.
Have we read that? In case of finite life, it has to be amortized. In case of indefinite life, amortization is not possible because there is no life. In that case, you have to do the impairment testing every year. बताया था मैंने आपको ये?
Yes.
सुना सुना लग रहा है, सुना सुना लग रहा है.
It's something different, sir. सुना लग रहा है.
सुना लग रहा है, something which is heard. Yes.
Yes, sir.
So intangible asset having indefinite useful life. Intangible asset not yet available for use means work in progress. Intangible asset work in progress, right? goodwill acquired in business combination. These are the three assets on which you are not required to see the indicator. You straight away, you have to, every year you have to do the impairment testing. Every year you have to compute the recoverable value, right? And friends, the impairment testing is mandatory on the above three assets at least once in a year. At least once in a year, right? Not if it is a listed company and the listed company is publishing the results on a quarterly basis and the listed company has, let's say, goodwill, or the listed company has an intangible asset with indefinite life, whether that listed company has to do this impairment testing 4 times in a year.
No, once
No.
a year.
It has to be once in a year. But whether always it has to be year end or it could be any time during the year.
During the year.
It is during the year any time. It could be at the end of the year. It could be any time during the year. For example, a company has done the impairment testing in the second quarter of the year. Second quarter means, let's say, on 30th of September. So whether in the next year, the company can do this impairment testing in 31st March in the next year?
Yes.
Answer
No,
is
not in.
Answer is no. Standard says that the frequency and timing of impairment should be consistent on a year-on-year basis, right? While it can be done anytime during the year. But for example, if you have done the impairment testing in the month of June, then next year you will also carry it in the month of June, right? So friends, for example, there is an intangible asset with indefinite life. Okay, in financial year 22-23, you have done the impairment testing in Q3. In 23-24, you have to also do in Q3. Okay, not yet used. You have done in quarter 2. In the current year, you are also required to do in quarter 2. Goodwill in quarter 4, you are also required to do in quarter 4. Okay, right? Clear or clear?
Clear, sir.
Clear in mind? Third points. Intangible asset having indefinite life is acquired in January 24. Whether impairment testing is required on this asset in financial year 23-24?
Yes, sir.
Have you seen the answer?
No, sir. Once in a year we have to do it, sir. Whether it is a
Yes.
purchase,
Yes. Absolutely right. Absolutely. Sir, if we have purchased in the month of January only and we are closing our financial year on 31st March, sir, how come the impairment will come? Have I told that you have to record the impairment loss mandatorily? What I have told? You have to do the impairment testing mandatorily. Correct? You have to do the impairment testing mandatorily. Is that clear? Is that clear? Right?
Clear.
When you go for interview, what your parents say? Your parent never told you na कि whether you will pass the interview or fail in the interview, you will crack the interview or not will be able to crack the interview. Your parent will say na, at least make the effort. At least interview देने तो जाओ. Yes?
yes, sir.
Yeah. So I haven't told you that अगर impairment testing करोगे तो impairment loss होगा. I never told you that whenever you will do the impairment testing, there will be impairment loss. What I have told you, you have to do the mandatory impairment testing. You have to mandatory impairment testing means you have to estimate the recoverable value. And if the recoverable value is lower than the carrying value, then only impairment will be there. Otherwise, no. Correct?
Yes, sir. When there is a indication, we have to do that.
Yes. The indication, so when there is an indication, you need to do the impairment testing. But for these three assets, you have to do the mandatory impairment testing.
Yes, sir.
Right? So my point is what I'm trying to say, Saminathan. So whenever there is an indication, you need to estimate the recoverable value. If no indication, you are not required to estimate the recoverable value. But in 3 cases, you have to mandatorily estimate the recoverable value. What are the 3 cases? Intangible asset having indefinite life, intangible asset not yet available for use, and goodwill acquired in business combination, right? So let's say in these cases, every year you have to mandatorily estimate the recoverable value. So you have estimated also. So there could be 2 scenarios when you estimated. your recoverable value may be lower than the carrying value, or your recoverable value may be the higher than the carrying value, right? So if your recoverable value will be higher than the carrying value, will there be any impairment? No, नहीं होगा ना.
Yes, sir.
No.
If recoverable value is lower than the carrying value, then only there is an impairment, right? Correct?
Yes, sir.
So friends, we discussed this part also. Yes. Yes. Yeah. So friends, it's 8:30 now. So let's have a 10 minutes break, and we'll start at 8:40, right? So
Okay,
it's
sir.
8:31 now. Let's have a 10-11 minutes break. We will start at 8:42. Okay. Yes. I hope my PPT is visible.
Yes,
Yes.
sir.
Yeah. So we discussed that for every time, every asset, you are not required to compute recoverable amount. Only when the indication exists, then only you need to compute the recoverable amount. Okay. And friends, in 3 cases, right? Intangible asset with indefinite useful life, not yet available for use, and goodwill acquired in business combination. These 3 cases, you need to compute the recoverable amount at least once in a year. Okay. These are the indicator we discussed. And what is my recoverable amount? Recoverable amount of an individual asset or of a group of asset. It's a higher of fair value less cost to sell or value in use. Okay. Now tell me one thing. Let's say the recoverable value of an asset of a building. So your carrying value of a building is 1 crore rupees. Carrying value of the building is 1 crore rupees. And you are estimating a recoverable amount and you have appointed a valuer. And the valuer has given you a fair value less cost to sell at 1.25 crore. Whether you will compute the value in use or not for estimating the recoverable amount.
No, fair value to cost to sell is already given.
So my question is, carrying amount of the building is 1 crore, right? And you have to, indication exists, you have to estimate the recoverable amount. For estimating the recoverable value, what two value you will compute?
Fair value less cost of disposal or value in use, whichever is higher.
And fair value less cost of disposal and value in use, right? So whichever is higher will be the recoverable value, correct?
Yes, sir.
So in this question, the carrying amount of the building is 1 crore. And you have engaged a valuer. Valuer has given you a report and he has given you a report fair value less cost to sell 1.25 crore. Right? The life of the building is 40 years. In this case, will you compute value in use or not? This is my question.
Yes.
So answer me.
Yes.
Answer
No,
me
sir.
question
Yes,
with yes or no.
It's no, sir, because if the model is choose for the cost value, cost model value is not needed, because anyway we are going to whichever is higher, which means carry value is less than that fair value. So no need. When there is a revaluation model, then we have to check value in use, whether it is a higher value or lower value, that we have to
No,
check
sir.
it.
So Saminathan, sorry. So one part you have answered it right, but the another part I haven't understood. So you are saying cost model, then so even in revaluation model, value in use is not going to be computed in revaluation model. In revaluation model, it is fair value, right? So
Sir,
value in use is only used for impairment, only used for computing recoverable value. Value in
sir,
use is not computed for revaluation model, right?
okay, sir,
So
okay. I am hearing the clarity for that as well. Cost model is very clear. There is, when there is a fair value less cost of disposal is higher than the carrying value, there is no need for computing other things. It's very clear. But when there is a revaluation model, we always check the fair value.
yeah,
In that case, whether is there anything we need to check for the value in use for that, sir, on the revaluation model?
no.
Okay, fine.
So there is no
Okay.
value in use. So my question is not about cost model or revaluation model. I have a simple question which I have asked. I asked a question that the carrying amount of a building is 1 crore, right? You have to estimate recoverable amount. Recoverable amount is higher of two amount, fair value less cost to sell and value in use. Okay. So you computed one leg, you computed one amount, which is your fair value less cost to sell, and it is coming at 1.25 crore. So my question is, should I compute value in use or not? That's the simple
No,
question.
no,
Yes,
sir.
sir.
No, not
Yes.
required.
What about
Because
others?
value in use could be greater than fair value less cost to sell also. That we have to take value in use.
Many students are saying no need. So let me explain first. Many students are saying no need. Tell me one thing. What is the formula of recoverable amount? Tell me. Higher of Fair value less cost to sell and value in
cost to
use.
sell and value in use, yes.
Right? And what is the intent of computing recoverable value? To check whether it is higher than the carrying value or lower than the carrying value, correct?
Yes.
If recoverable value is higher than the carrying value, then what? Then what you will require?
To do impairment loss.
That is
Impairment.
Then what?
So
I'm asking if recoverable amount is higher than the carrying value, तो क्या करेंगे?
Then we don't do this. We don't do impairment loss. There will be no impairment loss.
There will be no impairment loss, nothing. Then we do nothing.
Yes, got it.
Then we do nothing. So tell me, 1 crore is the carrying amount of the building. When you computed one part, you got 1.25 crore of the value. 1.25 crore of the value. In this case, don't you think one thing is sure and certain that impairment will not happen?
Yes.
If your fair value less cost to sell is 1.25 crore, your formula is higher. In any case, the minimum threshold is defined for 1.25 crore for recoverable amount. For example, if your value in use will come at 1.5 crore, so what decision will change?
It will not change. Yes.
It will not change.
It will remain the same.
Even
yes.
it will remain the same. And even you are not taking that value for any computation, any accounting, you're not using that value. That value is only important to take a decision whether it is going to be impaired or it is not going to be impaired. That's all. Assuming your value in use comes at 50 lakh rupees, whether a decision will change? No, because the concept is not lower, the concept is higher.
Higher, yes.
It's still 1.25 crore. So, my dear friends,
there will be no impairment loss.
My dear friends, just think logically. While the formula is higher of fair value as cost to sell and value in use, but if you have computed one part and either value in use or either fair value less cost to sell, then you are not required to compute the other part if that part is larger, is higher, is more than the carrying value, right? पहले से ज्यादा है ना, तो फिर क्यों करना है? Okay, just think logically. Have you understood it now?
Yes, sir.
Very much?
Very much got it.
Okay, great. Anyone who has not understood? Yeah? Saminathan, is it clear completely?
Yes, sir. Crystal clear.
Yes, very good. Great. Yeah. So, friends, this is what standard says that, and we discuss this. What is the, quickly, can you give me the answer of illustration number 1 of ICAI study material? As a formality, we have already done that. Carrying value 300 lakh. Value in use 250 lakh. Fair value less cost to sell 238 lakh.
62 lakh.
Recoverable amount.
250 lakh.
250 lakh is the recoverable amount. Higher, correct? So higher of these two, value in use and this. And what is the impairment loss?
50
lakh.
62.
50 lakh.
50 lakh, right? What is the meaning of fair value less cost to sell? Fair value is kind of a market value. The definition is given in standard, right? Fair value is a price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. What is my cost of disposal? My cost of disposal is an incremental cost. Right? Directly attributable to the disposal of an asset or group of asset, excluding finance cost and income tax expense. So, friends, cost of disposal, you remember we discussed a concept of directly attributable cost.
Yes, sir.
What is the concept of directly attributable cost?
It has to be added to the value of the asset, cost of the asset.
So can you speak one by one, please? Yes, the first one. Yeah.
Sir, directly attributable cost means the to the asset which is bringing into the present condition and location.
So directly attributable cost means had that asset not been there, probably the cost would not have incurred, right? Correct. If you will not drive the car, will you be able to burn the fuel?
No, sir.
No, means Your burning of fuel is directly attributable to the driving of the car. So, friends, directly attributable means had that asset not been there, the cost would not have been there, or had that event not been there, the cost would not have been there. Correct? Likewise, what is my cost of disposal? It's an incremental cost, which is directly attributable. Means, had this asset not been sold out, the cost would not have been incurred. Yes or no? If
Yes,
you
sir.
will not sell the asset, will you pay the commission to the property dealer?
No, not required.
You will not pay the commission to the property dealer if you will not sell the asset. But tell me one thing. You want to sell the asset, and for checking the value, you have engaged a valuer, right? Just to check the value and to take a decision whether you want to sell or you don't want to sell now. So you got the fair valuation done and you have paid a money to the valuer. So this valuation fee is a cost of disposal or not?
No.
Sir, answer is no, sir. It is not bringing to the present condition of sales. We can change the mood also based on the valuation. If it is a lower, okay, let it wait. We can say sell it for other time. The mood will change automatically.
Absolutely great. Absolutely fantastic explanation. Yes. So valuation fee is a sunk cost. It's a sunk cost, right? So once you got the valuation, you may decide to sell, you may not decide to sell, right? You may decide to sell, you may not decide to sell. But legal cost, let's say you want to sell that asset, and when you sell the asset, you have to incur a legal cost. You have to pay legal drafting charges to the lawyer for the transfer document. Is it a cost of disposal or not?
Yes, sir. It is incremental cost. Definitely.
It is incremental cost. If you enter into a sale transaction, then only you have to incur. Otherwise, no. Stamp duty, similar transaction taxes, or you are doing some special packaging for selling the asset. Is it a directly attributable cost or not? Means incremental cost of sale or not?
Yes, sir.
Yes, right. So these are the example of the cost of disposal, right? So for example, you have sold a building and you have to pay a long-term capital gain on that building, income tax expense. Will it be a cost of disposal? No.
No, sir. Income tax and the finance cost is excluded.
You took a loan on that building, so you are paying some interest cost. So that will not be the cost of disposal. Okay. Let's do one example from ICAI study material. So this example is from ICAI study material, while the look and feel is not from ICAI study material, but example is from ICAI study material. Yes. ABC Limited owns a bottling plant located in one of the factory. Okay. The professional valuers have estimated that the current market value of plant is 10 lakh. What is the fair value of the plant? What is the fair value of the plant, friends?
10 lakh.
Fair value of the plant is 10 lakhs. Okay. Yes, it is a 10 lakhs. Yeah. The valuation fee was 1 lakh rupee. Okay. Valuation fee is 1 lakh rupee. ABC needs to dismantle the plant and deliver it to the buyer. So if it has to be delivered to the buyer, the company needs to dismantle the plant. Dismantling cost rupees 2 lakhs. The dismantling cost is 2 lakh. Specialized packaging cost would be 1 lakh and legal cost would be 0.5 lakh. Legal cost would be 0.5 lakh. Determine the fair value less cost to sell. What is the fair value? 10 lakh. What is the cost to sell? Tell me. Whether this 1 lakh is cost to sell?
No, sir.
What about others? Whether 1 lakh is cost to sell?
Yes, that's right.
No, sir, this is some cost.
No, not required.
Valuation fee is not a cost to sell. Valuation fee is not a directly attributable cost to sell, right? So after doing a valuation, you may decide, you may not decide to sell, right? Whether dismantling cost of 2 lakh rupees, is it a cost to sell?
Yes.
Yes, sir.
Because when you have to sell only, then you need to dismantle. A specialized packaging cost of 1 lakh, is it a cost to sell?
Yes.
Yes.
Legal fee, is it a cost to sell?
Yes.
Yes, sir.
Okay. Yes, it is a cost to sell. Okay. So what is my fair value less cost to sell?
6.5 lakhs.
6.5 lakh. This is the answer here. 10 minus 2 minus 1 minus 0.5. 6.5 lakh is the cost to sell. So friends, fair value is a market value. Generally, it will be given in the question. Cost to disposal could be broken, right? So you need to think of, is it an incremental cost? Incremental cost means whether this cost will come into picture only when I will sell this asset. You need to think that line of demarcation. Valuation. Is it important to sell the asset always for getting a valuation? Many
No, sir.
companies are doing valuation on a yearly basis, right? So valuation is a kind of a decision making cost. It is not a selling cost. Okay. Value in use. What is my value in use? Value in use is present value of the future cash flow expected to be derived from an asset or a group of asset. Okay. So two things are important for value in use. Number one, estimating future cash flow. Number two, discount rate. As we have done a question, right? 1 lakh rupees the cash flow in the next 5 years. Discount rate was 10%. We have computed that and we have calculated that. Okay, right? So friends, for estimating the future cash flow, you need to estimate the future cash flow which the entity derives from the asset. Tell me one thing. When you are expecting and when you are estimating the future cash flow, is it only inflow or is it also outflow as well?
Sir, both we will consider, sir.
What about others? Sanjay?
Yes, sir. Both will be considered.
Both will be considered. It is outflow, inflow, both. It is inflow as well as outflow, both. Yes. So while estimating the future cash flows, you need to also estimate the possible variations in timings. Okay. Means time value of money you need to consider, and other factor you also need to consider, like you are doing a projection. Okay. Very theoretical part. The only thing is, to cut a long story short, you need to consider time value of money. You need to consider what could be the possible impacts in future. Okay. So you have to consider all those factors while doing the valuation. Okay. So what is the basis for estimate? For computing the value in use, you have to use the reasonable and supportable assumption of management, best estimate of the economic condition over the remaining useful life of the asset. For example, the management is estimating that the life of the asset is 10 years and management is depreciating over 10 years. So will you compute the cash flow for 15 years for that asset? Tell me. अगर लाइफ 10 ईयर है मैनेजमेंट के बेस्ट एस्टीमेट के हिसाब से, तो क्या आप 15 साल तक उसका कैश फ्लो एक्सपेक्ट करोगे, कंप्यूट करोगे?
We will calculate for 10 years only.
First 10 years.
Only for 10 years, right? So you have to consider a reasonable and supportable assumption of management best estimate of the economic condition over the remaining life of the asset. Greater weight should be given to the external evidence. Okay, means it's not about only internal thing, right? You have to give the more weightage to the external evidence, like external valuers report, technical valuer report, right? Most recent financial budget or forecast that have been approved by the management. While computing the future cash flows, you have to refer the recent financial budget or forecast which have been approved by the management. And projections would cover a maximum period of 5 years until and unless a longer period can be justified. Okay, right? So friends, generally, your projection of cash flow should be 5 years. It can be longer period if the longer period can be justified. For example, in case of aircraft, the aircrafts are very costly. Very, very, very costly. So tell me one thing. If I will compute the cash flows from aircraft for a 5 years, do you think the value in use will be more than the carrying value? The life of the aircraft is 20 years. In that case, you have to take a larger picture. You have to take a larger period. Okay. Solar power plant. If you will take a period of 5 years for value in use for solar power plant, it will always be negative. In many industry, what happens in many industry, The break even comes after 5 year or 10 year. Are you getting me? Right. So in that case, so normally standard is saying that you have to take for taking a cash flow projection, you have to take a period of 5 year until and unless a longer period can be justified. Okay. So this aviation industry, solar power industry, so telecom tower industry, so these industries are taking a longer period due to the heavy capital intensive tech industry, right? Cash flows includes, what includes? Cash flow should be estimated for assets in their current condition. Right. Means, for example, you are a transporter and you are having a, so friends, my internet connection is fluctuating. So I am shutting down my video for 5 minutes. Okay. For 4-5 minutes, let it settle down.
Okay, sir.
Okay. Yeah. So friends, my cash flow should be estimated for asset in their current condition. What does it mean? इसका क्या मतलब है? What does it mean? It means, for example, let's say you are a transporter and you have a fleet of 50 cars. Okay. And now you are computing value in use. You are computing value in use. Okay. So you need to estimate the cash flow for future cash flow for the next 5 year, or if more than that, if that period can be justified. For example, the fleet has a life of 10 years. So you can take a cash flow of 10 year also. So now what happened? So what you are thinking that after 5 years, I will spend in the technology and all my cars will be transformed into the driverless cars, into the driverless car. Okay. All my car will be transformed in driverless car. Okay. Now the point is, after 5 years, I will invest in a technology, I will have a cash outflow, and this will result in the regular savings of driver salary on a monthly basis, and it will be huge savings. So tell me whether I should consider those outflow and inflow in future for computing the value in use.
No.
No, sir.
Why no? Because standard says that cash flow should be estimated for asset in their current condition. In whatever condition it is today, I have to take the cash flow according to that only. Okay. Cash, second, you have to take cash inflow from continuing use of the asset, right? You have to take cash outflow, right? If you got a cash inflow, you will also have some cash outflow as well. Okay. You also have some cash outflow as well, right? So you have to include inflow as well as outflow. Okay. And you also need to consider net cash flow, if any to be received or paid for the disposal of the asset and the useful life. So what you need to take? First, you need to take the cash flow in the current condition. Number 2, you need to take the inflow as well as outflow. Number 3, you need to also take the terminal value. Terminal value. You understand what is meant by terminal value?
Yes, sir.
Yeah.
Yes, sir.
Yes. Is that clear or not clear?
Clear.
Yes, sir.
Clear?
Yes, sir.
Yeah. Yes. So what cash flow does not include? What is your estimated cash flow which does not include? Can anyone read for me or for the entire class? Neha, can you please read this slide? Or Akshay, even. Yes, Neha, please go ahead.
Cash flow does not include future restructuring to which an entity is not yet committed, improving or enhancing the asset's performance, cash inflows or outflows from financing activities, income tax receipts or payments.
Okay. So can you explain these 4 points? Akshay, can you please explain these 4 points?
Yes, sir.
Yeah, please.
So the first point says future restructuring to which entity is not yet committed. It means the cash outflow or the cash flows to which entity has not yet been committed for doing any restructuring on that. asset. Second point, improving or enhancing the asset's performance. That these cash flows will be the cash flows which are related to enhancing the capacity of asset, like adding some more capacity in the value of its production capacity. Third, cash inflow or outflow from financing activity. If we are refinancing the asset or we are taking some loan or like mortgage on that asset, that would amount to this cash inflow or outflow from financing activities. And income tax receipts on payment on that particular asset regarding cash flow, like we have any deferred tax on that particular asset.
Very good. Very good. Thanks, Akshay. Yes. So, friends, as I told you, like I told you, ki after 5 years, you are thinking that I will transform all my cars into driverless car, right? So, new technology will come and I will adopt the new technology. This is what you are thinking. Standard says that, listen, future restructuring, which you haven't committed today, you're not required to take the cash flows for that. Inflow, outflow, both. Improving or enhancing the asset performance. So you are thinking that, yes, after 5 years, I will invest. I will do some major capital expenditure and this will improve and increase my life of the asset, my value of the asset, and this will also increase my cash flow. Answer is no, right? Cash inflow or outflow from, you remember, as I told you in the cost of disposal also, cost of disposal does not include finance cost and taxes. Okay. For example, you have mortgaged an asset and you got a loan. So that financing activity, cash flow from financing activity, inflow, outflow also is not required to be considered. Okay. Income tax receipt or payment is also not required to be considered. Okay. So means when you are considering a terminal value, let's say terminal value is 1 lakh rupee, residual value is 1 lakh rupee, scrap value is 1 lakh rupee. So you know that if I will earn 1 lakh rupee by selling the asset, I have to pay a tax of 20,000 rupees also. So will you consider 1 lakh or will you consider 80,000 for cash flow? You will
1 lakh
consider
rupees.
1 lakh. You will ignore 20,000 rupees of tax in this cash flow estimation. Is that clear? So to cut a long story short, friends, while computing a value in use, you have to estimate the future cash flows. Once you estimate the future cash flows, you need to discount that using a discount factor, using a discount rate. Okay. Friends, while computing the future cash flows, you need to take a projection of 5 years until and unless longer period can be justified. Number one. Number two, you need to take cash inflow as well as cash outflow, both. Okay. So both from the continuing use of the asset and the terminal value of the asset. Both from continuing use of the asset and the terminal value of the asset at the end of the life or end of the expiry of the life. Okay. Both. Right. Second, friends, what you need to consider as a cash flow, you need to consider only cash flow in the current condition of the asset. Okay. You don't need to consider the cash flow which will arrive when the asset performance will increase in future. There will be some future restructuring, some future investment in technology. No, you are not required to consider. Okay. You are not required to consider cash flow from financing activity and cash flow from taxation as well. Right? Okay. Is that clear? Yeah. What is the discount rate? Discount rate is a pre-tax rate. Right? So how you will compute the discount rate? Either it is a weighted average cost of capital, or it is an incremental borrowing rate, or it is a other market borrowing rate. So generally it is an incremental borrowing rate. Generally, what is going to be considered incremental borrowing rate? What is the incremental borrowing rate? For example, if I have to discount 10-year cash flow. So if I go to the bank and ask for a 10-year loan, what bank will charge me as a rate of interest? That will be an incremental borrowing rate. Generally, this will be given in the question. This will be given in the question. Okay. Right. So friends, have you understood the concept of value in use and fair value less cost to sell? Yes or no?
Yes, sir.
Yeah.
Yes, sir.
Very
Yes,
much.
sir.
Very much.
Yes.
Now,
Yes, sir.
let's discuss the concept of value in use, how to compute value in use for foreign currency future cash flows. when the cash flows are in foreign currency. For example, you are an Indian company, okay? And there is a war which is happening in between Russia and Ukraine. चल रही है ना war, Russia and Ukraine के बीच में. Yeah? There is a war which is going on between Russia and Ukraine.
Yes,
चल
sir.
रही है नहीं चल रही?
Still continuing.
Yeah? Still?
Yes, yeah, it has been 2 years almost.
Yes, it has been 2 years since now. So let's say you are an Indian company, you are well placed, but you have a big building, big commercial building in Ukraine. Okay. So first of all, tell me whether indication of impairment is there or not.
Yes.
Indication of impairment is there?
Yes.
Indication of impairment is there. So if indication of impairment is there, whether you will estimate the recoverable value or not?
Yes, sir.
Yes, sir.
Yes, you will estimate. Okay, very good. Very good. Very great example, I would say. And this example I got in mind while I was speaking to you guys. Okay. So now let's say you have a big commercial building in Ukraine and you are an Indian company. So tell me that asset you have purchased in INR or in that euro or pound? In the foreign
currency.
In the foreign currency. Yes, foreign currency.
Yes, sir.
So the cash flow which you are generating, from that asset, is it in foreign currency or is it in INR?
INR.
Foreign currency, sir.
Foreign currency.
Foreign currency. Okay. Very good. Foreign currency. So friends, it is in foreign currency. Yes. So the point is, the asset is in a jurisdiction, it's in a foreign currency jurisdiction, right? You are generating cash flows in foreign currency. Okay. So in that case, your value in use will be computed in the foreign currency only. Okay.
Yes.
But you are an Indian company, that asset is converted into your balance sheet, at INR. You are an Indian company. So the point is, how to compute value in use in case of foreign currency future cash flows. This is the question. And let me answer that question, right? Okay. So let me give you some steps. What step says that? Step number 1, calculate the future cash flows in foreign currency only. If there is an asset which is lying in the foreign jurisdiction, you need to compute the future cash flows in foreign currency. Okay. Step number 2, estimate the discount rate applicable to the foreign currency. Tell me one thing. What is a discount rate? It's an incremental borrowing rate. What is the incremental borrowing rate? It's an interest rate. So whether interest rate in India, interest rate in US, interest rate in London, interest rate in Dubai, is it the same?
No, it will be different.
It will be different. So day before yesterday, I was speaking to one of my friend in USA. He told me that, Alok, I purchased 3 houses in US. I told, how come it is possible? So he told that in US, you got a home loan at a very cheaper rate of interest, say 3 to 4% maximum. And you have a rental inflow. Of the value of the house. Whatever is the value of the house, you have a rental inflow of 3 to 4% also. Right. So the home loan interest rate in USA is 3 to 4% maximum. In Dubai, it is again 3 to 4%. What about India? 7 to 8%. In India, it is 7 to 8%. So tell me one thing. If I have an asset on which you are computing the impairment, on which you are doing the impairment testing, you are computing a recoverable value, and that asset is in foreign jurisdiction, will you take the discount rate of India or discount rate of that jurisdiction where the asset is located?
The discount rate of that jurisdiction where the asset is located.
Yes, of course, yes. So that's what standard says, that first you need to calculate the future cash flows in foreign currency. Second, you need to estimate the discount rate in the foreign currency only. You need to estimate the discount rate in foreign currency. Third, calculate the value in use in the foreign currency. Calculate the value in use in the foreign currency. How you will calculate value in use? Simple. Future cash flows divided by discount rate. When you discount your future cash flows, you will get a value in use in foreign currency. Right. Fourth, once you computed the recoverable value in foreign currency, but you are maintaining books of accounts in INR, so then you need to convert the value in use in the foreign currency into INR using the spot rate. Because today you are doing the impairment testing. Today you are estimating the recoverable value. So today you need to compute the value in use in INR. Value in use in INR. So convert the value in use into Indian currency using the spot rate. Convert into Indian currency using spot rate. Is that clear? No? So let's discuss one of the study material from ICAI. Question number 7 from Test Your Knowledge. Question number 7 from Test Your Knowledge, right? करें इस पे एक क्वेश्चन? करें या छोड़ दें?
करते हैं सर.
करते हैं. Okay, very good. On 31st March 20X1, XYZ Limited makes following estimate of cash flows for one of its asset located in USA. Where the asset is located? Foreign country, foreign jurisdiction. तो इस एसेट का कैश फ्लो कहां से अराइज हो रहा होगा?
USA से.
USA से, right? So this on 31st March 20X1 reporting date, right? There are 3-year future cash flows. 1, 2, 2, 3, 3, 4. And what is the future cash flows? $80, $100,
$100, $20.
$20. $80, $100, $20. These are the 3 cash flows. Following information has been provided. Applicable discount rate, India, USA. Applicable discount rate, okay? So first of all, step number 1. What is the step number 1? Compute the cash flows in the foreign currency. So have we given the foreign currency cash flow? Answer is yes.
Yes.
These are the foreign currency cash flow. Step number 2, use the discount rate applicable in the foreign currency. Which discount rate I should use?
10%.
10%.
USA 10%.
10%, right? So I have the discount rate, I have the cash flow. Can I compute value in use?
Yes, sir.
Yes.
And can I compute that value in use?
Yes.
Yes.
Yeah,
Yes, sir.
I can compute the value in use. Yes. How can I compute the value in use? Simple.
By discounting the
By
cash
discounting the cash flow, I can compute the value in use. Right? Okay. Yes. So friends, let's compute the value in use. Step number 1. Cash flow is given. I hope my Excel file is visible. How much is the cash flow? 80, 120. 80, 120. Okay. Total cash flow is 200. What is my discount rate? 10% I should take. This is 1 divided by 1.1. Right? 1.1. Okay. What is my present value in foreign currency? My present value in foreign currency is this one. Present value in US dollar. The total 200 cash flow has a present value of 170 US dollar on 31st March 2001. You got the value in use in foreign currency in US dollar. Now, exchange rate is also given for 31st March 2001, 2, 3 and 4. Tell me whether the exchange rate of 31st March 2001 is of any use.
Yes, we will.
Yes, sir. We have to use the spot rate of that particular date.
Yes. So on 31st March 2001, you are computing your recoverable amount. You are doing impairment testing. You are checking impairment loss. So in that case, what is your exchange rate? So whatever your value in use have come in dollar, it will be converted into INR using this rate. And whether these 3 rates are of any use. These 3 rates.
No use, sir.
No
Only
use.
to confuse us, sir.
Huh?
It's there only to confuse us.
Yes, it's there only to confuse you guys. but you guys will not get confused because you guys are the student of Alok Garg.
Alok Garg.
Yes, you
Mr.
will not be confused. Yes, yes. So
Doctor,
your step number 4,
Dr.
your Dr. Alok Garg, step number 4, exchange rate is 45. So what is your present value in INR? 170 multiplied by 45, right? So you have to take a spot rate on 31st March 2001. So have you understood, in case of foreign currency cash flows, don't get confused. If the question is given you the discount rate in INR and the spot rate and the future rates also on all those reporting date, don't get confused. Don't translate 80, 120 into INR first, then you need to do the discounting. No. First, you need to compute the value in use in the foreign currency. As simple as that. उसमें तो कोई challenge नहीं है ना?
No, sir.
It is just a number. How does it matter if it is USD, INR, or in Bangladeshi taka, or in pound or Japanese yen or Chinese yuan? You are least bothered. These are the numbers. So number, if you have the cash flow, if you have the discount rate, you guys are expert in doing this present value calculation. So you got the present value of future cash flow in US dollar, right? You got the value in use in US dollar. Now just convert that in INR. That's all. Yes?
Sir, if the buying rate and selling rate given on the spot rate,
if the buying rate and selling rate is given for the spot rate, right? In that case, what you need to do? So you need to see what you have to do. You are doing the impairment testing. Okay. So in that case, you can take, so in the impairment testing, what you are doing, either you are selling the asset or you are using the asset, right? So you can use the selling rate. You can use the selling rate. Okay. So you can say, you can write the assumption also, okay, since both the rate are given, so we are using the selling rate for computing the discount rate. Okay. Right?
right, sir. Yes, sir. When the cash inflow is there, which means the dollar is received, definitely when you are going to sell that to the dealer, they will get that.
Yes.
For them, they will give that Indian rupees to me. I am selling, which means they are purchasing.
Yes. So I am the entity now, because, if I am selling, so it means I have to use the selling rate, kind of, right? So that is why you can use the selling rate. But don't worry, in question, buying rate and selling rate will not be given. It is the rate which is given in the question. Okay, not to worry.
Okay, sir.
Yes. So yes, now coming to the illustration number 3, whatever I have explained you in PPE, intangible asset, impairment of asset. So this is a complete question. This is a complete question. Illustration number 3. I hope you guys are able to see illustration number 3.
Yes, sir. It's
Yes.
Please read this illustration along with me. Please read this illustration, okay? And this is the last illustration, last question of today's class. Mars Limited gives the following estimate of cash flows relating to property, plant and equipment on 31st March 2004. The discount rate is 15%. What is the discount rate? So discount rate is given in the question, 15%. And this is for PPE. And what is the reporting date? 31st March 2004 is the reporting date. The cash flows are given in lakhs. So 2004 is the reporting date. Future cash flows are given, right? Future cash flows are given. 45, 56, 67, 78, 89, and the residual value on 31st March 9. Means, what is the remaining life? What is the remaining life? 5 years. 5 years is the remaining life. Okay, 1, 2, 3, 4, 5. Remaining life. These are the cash flows given: 2,000, 3,000, 3,000, 4,000, 2,500. Right? So till now, discount rate is given and the future 5-year cash flows are given. Okay. Property, plant and equipment was purchased on 1st April 2001. Which date? Which date?
2001.
1st April 2001. And here we are talking about which date?
20x4. 3 years.
20x4. Means how much years back? 3 years back.
3 years back.
Means from this information, 3 years before this asset was purchased at 20,000 lakhs. 20,000 lakhs. Okay, means 2,000 crores. Useful life was 8 years. And you are also able to appreciate that the useful life is coming out at 8 years because why? The 5-year future cash flows are given with a terminal value and 3 year has already passed. So what is the total life?
8.
Useful life was 8 years. Residual value at the end of 8 years is estimated at 500 lakhs. Right? So it is also given in the question. Na? It is also given in the table 500 lakhs. Fair value less cost to sell is 10,000 lakhs. Right? Fair value less cost to sell is given as 10,000 lakhs. So these are the information which is given, and the question is asking you 3-4 things. Number 1, tell me what is the recoverable value, while it is not written in the question, but this is the ask, right? So question number 1, what is the recoverable value on 31st March 2004? Means what is the fair value less cost of disposal? What is the fair value less cost of disposal on 31st March 2004?
10,000 lakhs.
10,000 given in the question. What is the value in use? As on 31st March 2004, you need to compute.
Has to be calculated.
You have all the cash flow, continuing using cash flow by continuing use and cash flow by terminal value. You have the cash flow, you can compute value in use. Now, question number 3. What is the value in, what is the carrying amount of this asset on 31st March 2004?
2024.
You need to compute.
How will you compute?
12,500.
And how have you computed 12,500?
20,000 divided by 8 is the depreciation per annum for
So
3 years.
allow one student to complete, please. Yes, Sanjay, please.
The depreciation for 3 years comes to 7,500. We will reduce it from 20,000 lakhs, and then it comes to 12,500.
So what is the formula for depreciation? Tell me.
Sir, the residual value we need to reduce it, sir, first. That is 20,000 minus 500 divided by 8.
Oh, I have not reduced 500.
Yeah. So Sanjay, the formula for depreciation is cost minus residual value divided by useful life, right?
Yes,
this is the formula,
yes,
Sanjay?
Yes, I missed it.
Yeah.
I did not look at it. Yes.
Yeah.
I did a mistake. Yes.
No problem. This mistake was done by majority of the students. Believe me, majority of the students. And this is what you need to consider. Okay. So your depreciation is equal to what is your cost. For example, you purchase the asset at 10,000 rupees and you know that end of that life, I will get 1,000 as a scrap value. So what is the net cost to you? 9,000 rupees. Right, Sanjay?
Yes, sir.
So if 9,000 is the net cost and life is 10 years, so how much you will depreciate? 9,000 or 10,000? 9,000 means 10,000 minus scrap value divided by useful life. Means cost minus scrap value divided by useful life. Yes. Correct? Cost minus scrap value divided by useful life. So friends, how you will arrive at carrying value on 31st March 2004? Cost 20,000 minus residual value 500 divided by 8. This is just for computation of depreciation. You are not selling the asset today. So that will give you the per annum depreciation. And when you multiply by 3, you will get accumulated depreciation for 3 years, right? When you reduce it from 20,000, you will get a carrying value of the asset on 31st March 2004, right? You will get the carrying value of the asset on 31st March 2004, right? This is what it is here. Okay. Is that clear or not clear? So yes, friends, let's solve this question. Shall we solve this question? करें इस question को solve या छोड़ दें? Yes.
करें sir.
Let's solve this question. I hope the Excel file is visible to all of you. Is it visible?
Yes, sir.
Cost of PP is 20,000 lakhs. Life is 8 years. Purchase date is 1st April 1. Residual value is 500 lakhs. Discount rate is 15%. Ask of the question. Ask of the question. What is the ask of the question? Compute asset 31st March 2004. x4. What you need to compute? Number 1, carrying amount. Number 2, recoverable value. You need to compute value in use, fair value is given, recoverable amount. Third, impairment loss. Fourth, revised depreciation, right? Carrying amount, recoverable amount, impairment loss, revised depreciation. Okay. These are the 4 asks. Shall we compute the first carrying amount? What is the cost of PP? Cost of PP is 20,000 lakhs. What is my accumulated depreciation for 3 years? 3 साल का depreciation कितना होगा? 20,000 minus 500 divide by 8 multiply by 3 कर दूं?
Yes.
7312.
7312. What is my carrying value? 12,688 lakhs. So carrying value we have arrived at. Now I need to compute fair value less cost to sell. Okay. Should I compute fair value less cost to sell? It is given in the question. I need to compute value in use. So what is my value in use? So what is my cash flow? Can anyone tell me what is my cash flow? So let me see.
2,000,
2,000,
3,000,
3,000, then
4,000.
4,000, 2,000. And there are 2 cash flows in 8-9. One from the continuous use, one from the terminal value, right?
Yes.
Yeah, 500.
This is the total cash flow. What is my discount rate? My discount rate is
15%.
So what is the first year cash flow? 1 divided by 1.15. Until and unless question will tell you that you will have the cash flows at the beginning of the year. Until and unless the question will tell you, you will have the cash flow at the beginning of the year. Don't assume that it is at the beginning of the year. Don't assume. Is that clear?
Okay, sir.
Yeah. So always assume cash flow at the end of the year.
End of the year.
अगर क्वेश्चन कह रहा है beginning of the year, then फिर तो क्वेश्चन की माननी है ना. Question is my बाप. Question is the godfather. Right? Okay. So, and what is the difference if cash flows are at the beginning of the year, then what will be the difference?
Then the first value will be 1.
Then the first present value factor will be 1. So if I have 100 rupees today, what is the present value of 100 rupees today?
600 rupees only.
100 rupees. Right? Okay.
So we have to take 3 digits, 3 decimals, up to 3 decimals.
Yes, you have
or
to
up
take.
4
You have
decimals.
to take 3 decimals. Okay. You have to take 3 decimals. Are you okay with the present value calculations? My friend?
Yes, sir.
This
Yes,
is the
sir.
value in use. This is the value in use 9510. So 9510 is value in use. Friends, now you have the carrying value, you have the fair value less cost to sell, and you will have the U value in use. So what is your recoverable value?
10,000.
Why? Higher of
It's higher of fair value
less
less
cost to sell and
cost
value
to
in
sell
use.
and value in use.
Yes. Your recoverable value is 10,000. So whatever is more, fair value or value in use, that is the recoverable value. What is your impairment loss? What is your carrying value?
Carrying value is 12,688 and
12,688.
impairment loss is 688. 2,688.
Yes. Carrying value is 12,688. Question number 1, right? This was your question number 1, carrying amount. Recoverable value is 10,000. Impairment loss. What is my impairment loss? Carrying value is on 31st March. So impairment loss will be how much? 12,688
2688.
2,688.
2,688. Now, what will be the carrying value? What will be the carrying value as on 31st March 2004? Now, cost minus accumulated depreciation minus accumulated impairment losses. H पर PP क्या पढ़ा था मैंने? Carrying amount क्या पढ़ाया था?
Cost minus accumulated depreciation minus accumulated impairment losses.
So what is your revised carrying value, मेरे दोस्त? What is your revised carrying value? Your
10,000.
revised carrying value is 10,000 na? 10,000
Yes,
revised carrying value, right?
Same as
Yes.
You guys are like Lord Hanuman, right? And who is Lord Hanuman?
याद दिलानी पड़ती है.
उनको उनकी शक्तियां याद. जामवंत. So when Lord Hanuman has to cross the sea to reach Lanka, so Jamwant has made him remember that what kind of power you possess, what is your skills. Same way, I need to let you know, guys, what is your power and skills. You know everything, right? And you are brilliant students. But वो मुझे याद दिलाना पड़ता है आप लोगों को, तब आप लोगों को याद आता है. Yes, what is revised carrying value? 10,000 become a revised carrying value. Why? Cost minus accumulated depreciation minus accumulated impairment losses. Now, what will be my revised depreciation for 2004-5? Tell me. कितना होगा? मैंने कुछ बताया था आप लोगों को, कुछ बताया था मैंने.
10,000 minus.
So what I told you, opening value, carrying amount divide by remaining useful life. What is the remaining useful life?
5 years.
5 years.
5 years.
5 years.
The residual value.
Sorry?
Will we consider residual value?
Yes.
Don't consider, sir.
Very good. So tell me, 10,000 is the revised carrying value on 31st March 2004. Don't you think you have a residual value also after 5 years?
Yes, sir.
Don't you consider that? Don't you consider that? 10,000 minus 500 divided by 5. This will be your revised depreciation. आप हर बार क्या करोगे? हर बार depreciation compute करते हुए what you will do? Carrying amount. See, the residual value you have subtracted only for the purpose of calculating depreciation. So let me show you one thing. You have purchased a car for 1 lakh, right? Life 10 year. Residual value 1 lakh. Sorry, 10,000. So what is the depreciation per annum? What is the depreciation?
9,000.
1 lakh minus 10,000 divided by life. 9,000. Right. Carrying amount at the end of each year. फटाफट बताओगे कैरिंग अमाउंट क्या होता है? ईयर 1 2 3 4 5 6 7 8 9 10 ईयर. ग्रॉस ब्लॉक क्या होगा? ग्रॉस ब्लॉक इट विल ऑलवेज बी 10,000. सॉरी, ग्रॉस ब्लॉक विल ऑलवेज बी 1 lakh ना?
1 lakh, yes. Accumulated depreciation.
Accumulate. So first of all, let me write depreciation for the year. Dep for the year. Okay? Dep for the year. And then accumulated depreciation. What is my depreciation for the year?
9,000.
9,000.
9,000 depreciation for the year. Okay. Right. What is my depreciation for the year in the next year?
Same 9,000.
Same 9,000 is the depreciation for the year. Right. Same 9,000 is the depreciation for the year. Now, at the end of the 3 year, what is your accumulated depreciation? At that
27,000.
27,000.
And what is your carrying amount at the end of the 3rd year?
It will be
23,000.
77.
73,000 is the carrying amount, right? Now, let's say, so the company has opted for a revaluation model, assuming, right, fair value model. So the fair value on this date is, let's say, 80,000. Fair value on this date is 80,000. Now tell me, what is your revised carrying amount? Revised carrying. What is your revised carrying amount?
Sir, 80,000.
80,000.
80,000 will become your revised carrying amount. 80,000 is the fair value, right? So when you have opted for revaluation model, your accumulated depreciation will become 0 and your gross block will be shifted from what? From 1 lakh to 80,000. Now this will become your value. This will become your value, correct? So now
Yes,
the
sir.
question is, what is the depreciation in this year now? And you will sell this asset at end of the life. You will sell this asset at 10,000. What is the depreciation now?
80,000 minus residual value divided by life of the remaining life of the years. That is 7
80,000.
years.
80,000
Minus 10,000
80,000
residual
minus
value
10,000 residual value divided by remaining
divided by
life is
7 years, which is remaining life.
7 years, right? Which is remaining. This is how it has to be there. This is how it has to be there. And let's say at the end of the life, right? This is your, now your accumulated depreciation is this one only. Your carrying amount is now this amount. ठीक है ना? Fair value 80,000 means net block की fair value 80,000 है. Any doubt up to this level? Any doubt? किसी को कोई doubt है यहाँ पे?
So accumulated depreciation will be 37,000 fourth year में.
So in fourth year, accumulated depreciation will be why 10,000? Because this 1 lakh value, 1 lakh was the gross block, 27,000 was the accumulated depreciation, 73,000 was the net carrying amount. So this has been replaced with the fair value, na? So market
Okay.
value क्या होती है? Market value तो net value ही होती है ना? So your gross block will be replaced. Your gross block will be replaced. Or if you want to continue with this 1 lakh, in that case, you have to show it at 37,000. So both way you can do, right? Both way you can do. If you want to show 1 lakh rupee, then you have to show it 37,000, right? Should I show that way? Let's say if you have to do this way, then what you are required to do, you have to show this value as a this plus this, right? Clear?
Clear.
But the carrying amount, what will be the carrying amount? In that case, there is a revaluation surplus element also, na? Are you
Yes.
getting me? The value was, earlier the value was what? The value was 73 and you have fair valued at 80. What accounting entry you have passed? Fixed asset PP account debit to revaluation surplus.
Revaluation surplus.
So you have to add 7,000 also, then it will become 1,07,000.
Yeah, yes, yes.
So that is why what I have done, that is why I have done this at 80,000. मैंने उसका वैल्यू ही चेंज कर दिया, 80,000 कर दिया. Now you have to complete fresh depreciation. So every year you will have this much amount and your accumulated depreciation will be this plus this, right? And what will be your carrying amount at the end of the year? 10,000. What is the residual value? 10,000. You will solve it. Correct? So friends, that's how your revised carrying amount will be 10,000 and your revised depreciation will be 1,900, so that at the end of the 5th year, means the remaining 5 years are there. So at the end of the 5th year, you will left with 500 lakhs. Okay. This is your closing WDV, closing carrying amount at the end of 2005. I hope this concept is clear to all of you. If there is any doubt, please ask. Is it clear to all of you? Yes or no?
Yes, sir. Very much clear.
Clear in mind or clear from mind? Anyone, if anyone has even a single doubt, then please ask. Sanjay, is that clear?
Yes, clear.
Very much clear?
Yes, very much
Akshay,
clear.
is that clear?
Sir, what you have told it is clear, but I have a doubt.
Yes.
Sir, and a PP is readily available for sale as it is conditioned for 5 lakh rupees. Else, company can refabricate or repolish or repaint the same with a cost of 30,000 and sell it for 6 lakh rupees. Now, what does amount to the fair value of the asset?
Sorry, are you talking about end of the useful life or what you are talking about?
No, right now at the carrying amount is something different. But when we go to value the fair value of the asset, there are two options that अभी जैसा है वैसा हम उसको सेल कर सकते हैं 5 लाख
आपको जैसा है वैसा नहीं देखना है वैल्यू. right? So
Okay,
basically,
we don't have to go for
No.
that restoration part.
no.
Okay.
Basically, what happened, Akshay? Like in value in use, you remember I told you when you are computing cash flows, I told you, no, you
Yes.
have to assess the cash flows, you have to estimate the cash flows in the same condition in which the asset is present, right?
Yes.
And I told
Right.
you specifically that tomorrow you are thinking that I will invest in this asset, I will upgrade this asset, and I will have more cash flows. So don't do that. I strictly say no. Okay. So likewise, what is my fair value today? And not only fair value, you have to reduce the cost of disposal as well. Why? Because the intent is to sell the asset and fetch the market price. Okay. So whatever, so you have to take the value in the condition in which the asset is as of now, not in the condition in which there is a potential opportunity to sell at a higher price after investing something in the asset. No. Right?
Okay. Right.
So friends, we understood that the carrying amount we understood, and what is the formula of carrying amount? Cost minus accumulated depreciation minus accumulated impairment losses. While calculating the impairment losses, we need to compare with cost minus depreciation, and then I need to compare my recoverable value, right? And if my recoverable value is higher than the carrying amount, nothing doing. But if my recoverable value is lower than the carrying amount, you have to book the impairment loss. Okay. And friend, what is my recoverable amount? It is higher of fair value less cost to sell and value in use. So fair value less cost to sell is a value which you will fetch by selling the asset. Value in use is a value which you will receive by using the asset. And that is why fair value less cost of disposal is a price which you will receive by selling an asset minus cost of disposal. Value in use is a present value of future cash flows. Okay. So this is how we need to compute our impairment loss. And my dear friends, we need to, every time we need to see if there is an indication of impairment, then only you need to estimate recoverable amount. Otherwise, you are not required to estimate recoverable amount. But for three intangible asset not yet available for use, intangible asset having indefinite life, and goodwill acquired in business combination, for these three kind of asset, you need to compute the recoverable amount once in every year, right? And whenever you compute, please maintain the consistency on the frequency and the timing. Okay. Is that clear? Guys?
Yes, sir. Clear, sir.
Absolutely clear?
Crystal clear.
Yeah.
Clear, sir.
Very good. Okay. So friends, it's 9:52 now, and I hope you have enjoyed the session today. Have you understood the concept, whatever I've explained? Yeah.
Yes.
Very much.
Yes, completely.
Yes. Okay, very good. And I hope, just I wanted to have a feedback from all of you. I hope so I'm able to communicate in a very easy language, right?
Yes.
Are you able to understand my examples?
Yes, sir.
Yes, sir.
Yes.
Yes.
Sir, your example and approach and the language, everything is very pakka, sir. Very nice. We really love the class from morning 7 o'clock till now 9:52. It's no, we are in the cakewalk actually. We are eating like a favorite food. Thank you so much, sir.
Thank you so much. Right.
Yes, he's right. And you keep us engrossed completely for 3 hours. And I'm always on the toes, writing the notes, answering your questions, and taking the examples in my mind and trying to remember them.
Great, Sanjay.
Yeah,
Great.
completely.
Thank you so much. Because my job will be. You have
Sir, I have. Sir, the basic thing is you are teaching us the concept very nicely, and we are understanding everything.
Thank
So
you.
the basic point which we students fail at a point is how to write in the exam, how to present our answers so that we get a good marking from there. So I'll request you to guide us on that also.
So, Akshay, as I have explained question number 7 on the foreign currency cash flows, have you seen the presentation which I have solved on the Excel file? I have also solved illustration number 3 of ICAI study material, and on this carrying amount, recoverable amount, impairment loss, revised depreciation. Have you seen the presentation? right?
Yes, sir.
So this is how you need to write. This is how you need to write. So please don't go with the ICAI Board of Studies and don't copy that, right? ICAI Board of Studies have, also mentioned paragraph number. You are not required to write the paragraph number. Simple, you need to write the concept and simple solve the question step by step. For example, in this question, what you can do in illustration number 3, which I've recently completed, you can just put the basic information on the solution, and then you can say, number 1, computation of carrying value on 31st March 2004. So carrying value is equal to cost minus accumulated depreciation minus accumulated impairment losses, right? So cost is this, accumulated depreciation is this, right? So carrying value before impairment loss is 12,688 lakhs. So step number 2, compute recoverable value. So fair value less cost to sell is given, recoverable value for value in use into compute. So then you need to compute value in use, right? Then you need to impair, right? And then you can say that my 31st March 2004, after impairment, my revised carrying value, as I write, on 31st March 2004 is 10,000 lakhs, right? So whatever you know, right, in a very simple language, step by step, the formula, the concept you have to put, and the answer you have to give. That's all. Believe me, when I written my, kind of FR paper at my time, so, and I got third highest in India on FR and self-study. So whatever I've written, as far as my knowledge is concerned, as far as the concept which I am aware, I've written the concept and I solved step by step. That's all. Right.
Okay,
Believe
sir.
me, you got a full marks. Believe me. Right.
Okay, sir.
The only prohibition is don't write paragraph number. 99% it will be wrong. And
Yes.
if the examiner will be kind of a person who remember the paragraph number, then he will not appreciate you, he will depreciate you, he will cut your marks.
Yes.
Right?
Even
While
your
chances are less, but fir bhi, don't write very technical thing. Right? But use right things, use right terminologies. For example, fair value less cost of disposal, value in use. For value in use, you cannot write NRV. It is not net realizable value. It is value in use, right? There is a big difference between NRV and value in use. There is a big difference between net realizable value and fair value less cost to sell. Big difference. Right? Is that clear, Akshay?
Yes, sir. Yes, sir.
Okay. So thank you so much, friends. Let's call out the class. Let's conclude the class. Stay safe and stay happy, and do the revision of what I have explained. And please refer the Board of Studies material, ICAI study material, RTP material. Please solve those questions till the concept whichever I have told you. Okay. Thank you so much. Bye bye. Take care.
Thank you, sir.
Thank you, sir.
Sir, Excel file location,
Excel file.
sir, is uploaded.
Excel
Sir,
file
where?
up to the last class is uploaded. Right. In days 38 tak
Where?
uploaded. If not, I will check with ICAI. Okay.
Sir, matlab where? Which website?
So
on
Ajit,
your knowledge portal.
yeah, on BOS portal. Okay. Thank you, friends. Thank you.
Students, please fill the feedback form. We have checked that you are not filling the feedback form.
Sir, I am regularly filling, sir. Thank you, sir.
You have filled, but other students did not fill.
Okay, we will do it. We will do it today.
Okay.